promising opportunities and exchanges. I take this opportunity to express our deepest thanks to the Turkish Ministry of Treasury and Finance for their comprehensive partnership to this event, and many thanks for His Excellency Dr. Thani bin Ahmed Al-Zayudi, Minister of State for Foreign Trade of the AOE, for his participation and for his instrumental role in negotiating and signing the comprehensive economic partnership between Turkey and the United Arab Emirates. Turkey is a major destination for Arab investment, especially in the banking and financial sectors, as well as in real estate and other industries. Given the very positive development in Turkish-Arab political and economic relations, we expect much higher growth in bilateral relations driven by investment flow, capital market, private equity, and venture capital of both Arab and Turkish origins. Finally, allow me to express our most sincere thanks to Mr. Erkan Kork, Chairman of PayFix, the strategic partner of this forum, to our sponsor, Türkiye Finance, A&T Bank, Hak Bank, and Ininal, to the co-organizer TUDEP, and the Turkish government ministries and body for their tireless support. We wish you all enjoyable stay and a fruitful day at the forum, and we look forward to seeing you again in the next year. Thank you.
Thank you, Mr. Abuzaki. If you may allow me, I will invite our second speaker, Mr. Ufuk Bilgetekin, the chairman of TÖDEP.
Değerli konuklar, Türk-Arap Finans Forumu'ndaki sizlerle bir araya gelmekten büyük memnuniyet duyuyor. Türkiye Ödeme ve Elektronik Para Kuruluşları Birliği adına sizleri saygıyla selamlıyorum. Bildiğiniz gibi 11 ilimizi, 14 milyona yakın vatandaşımızı etkileyen büyük bir afet yaşadık. Sorunların üstesinden gelebilmek, yaralarımızı sarabilmek için ülke olarak el birliğiyle çalışıyoruz. Bu süreçte dost ve kardeş ülke Birleşik Arap Emirlikleri tarafından ilk günden itibaren sağlanan destekler için başta Devlet Başkanı Sayın Zahid El-Nehyan olmak üzere tüm kamu kuruluşları ve Arap halkına ülkem adına teşekkürlerimi sunuyorum. Destekleriniz hiçbir zaman unutulmayacaktır. Kadim bir geçmişe sahip olan Türk-Arap halkları arasında yürütülen siyasi, kültürel ve ticari alanlardaki işbirlikleri bizler için her zaman kıymetli olmuştur. Bölgedeki ortak potansiyelimizin güçlü bir şekilde artması ve en büyük temennimizdir. Bugün bir araya geldiğimiz Türk-Arap Finans Forumu'nu bu önemli bir göstergesi olduğunu belirtmek isterim. Forumun düzenlenmesinde emeği geçen herkese şükranlarımı sunuyorum. Bildiğiniz gibi Türkiye'nin büyüyen ekonomisi dijital çağın gereklerine uygun olarak hızla gelişmekte ve kat etmektedir. Bununla doğru orantıda özellikle son birkaç yıldır Fintech sektöründe hissedilebilir büyüme kat ettiğimizi rahatlıkla ifade edebilirim. Bugün Türkiye'de ödeme ve elektronik para hizmetleri, bankacılık, yatırım, sigorta, kredi, kripto para ve finansal yönetim gibi alanlarda birçok Fintech şirketi faaliyet göstermektedir. Türkiye sahip olduğu güçlü finans sektörü, nüfusun dijital yatkınlığı ve jeoekonomik durumu Fintech sektöründe güçlü bir potansiyele sahip olduğunu göstermektedir. Cumhurbaşkanlığı Finans Ofisi'nin Fintech durumu raporuna göre Türkiye'de mevcutta 520 adet Fintech şirketi vardır. Aynı zamanda Türkiye girişim ekosisteminde her sene kurulan girişimlerin ortalama %9'u Fintech dikeyinde çıktığını biliyoruz. Bu ve benzeri etkinliklerin katkılarıyla ülkemizin sahip olduğu vizyon, gelişim, hızı ve rekabet gücü sayesinde yurt dışı açılımların ilerleyen dönemde çok daha hızlı olacağına inanıyoruz. İnovasyon, teknolojik altyapı ve nitelikli insan kaynağı Türkiye'deki Fintech sektörünün güçlü yanları olmakla birlikte sermaye ve yatırımların bu alana yönelmesi gerekmektedir. Fintechlere yönelik hızlandırma programlarının artışı ve girişimlerin fintechlere olan ilgisiyle bu alanda çalışan şirketlerin sunduğu yenilikçi çözümler, seçenekleri yerli yabancı yatırımlar için fırsat olarak dikkat çekmektedir. Değerli konuklar, Türkiye ve Birleşik Arap Emirlikleri arasındaki ekonomik işbirlikleri ivme kazanarak devam etmektedir. Bu ayın başında imzalanan kapsamlı ekonomik ortaklık anlaşması ile Cumhurbaşkanımız Sayın Recep Tayyip Erdoğan'ın da ifade ettiği gibi mal ve hizmet ticaretinin önündeki engellerin kalkması, KOBİ'ler dahil olmak üzere yatırımcı ve girişimcilerimizin faaliyetlerinin kolaylaşması beklenmekte. Ticaret hacminin ise 5 yıl içerisinde 25 milyar dolara ulaşması amaçlanmaktadır. Türkiye ve Arap ülkeleri arasındaki işbirliği, fintech sektöründeki ivmeyi hızlandırmak için büyük bir fırsat sunuyor. Bu işbirliği, sınır ötesi ödeme sistemleri, dijital bankacılık ve yatırım platformları gibi alanlarda ortak girişimler oluşturabilmesini sağlayabilir. Bu anlamda sektörümüzde geliştirilecek yeni stratejik ortaklıklar ile ekonomik fırsatların birlikte değerlendirilmesi hem iki ülke halkına hem de ekonomiye katkı sunacaktır. Bu noktada fintech sektöründeki oyuncular için kolaylaştırıcı adımların atılması noktasında önemli bir konumda yer alan Türkiye Ödeme ve Elektronik Para Kuruluşları Birliğimizden kısaca bahsetmek isterim. 2020 yılında faaliyete geçen birliğimiz halihazırda 29 ödeme kuruluşu, 45'i elektronik para kuruluşu olmak üzere 74 paydaşımız mevcuttur. TÖDEP, ödeme ve elektronik para sektörünün gelişimi için mevzuata kolaylaştırıcı adımların atılmasını sağlamak için kamu otoriteleriyle açık iletişim ve etkin koordinasyonu odağına alarak sektörün ihtiyacı olan yasal düzenlemelerin dile getirilmesi, görüş ve önerilerin gündeme alınmasını sağlamak için faaliyetlerini sürdürmektedir. Biliyoruz ki bu alanda yapılacak düzenlemelerin öncelikle sektörümüze, dolayısıyla ülke ekonomisine önemli bir katkı sunacağı açıktır. Bu görüşlerimizin kamu otoritelerince de karşılığını olduğunu görmek bizleri memnun etmekte, motivasyonumuzu artırmaktadır. Başta Cumhurbaşkanlığı Finans Ofisi, Cumhurbaşkanlığı Yatırım Ofisi ve Hazine ve Maliye Bakanlığımız olmak üzere tüm kamu kurum ve kuruluşlarımıza çözüm odaklı yaklaşımları ve sektöre dair teşvikleri nedeniyle sizlerin huzurunda teşekkürlerimi iletmek istiyorum. Birlik olarak yurt dışı işbirlikleri ve organizasyonları önemsiyoruz. TAF F1 bizim ilk yurt dışı etkinliğimiz. Hedefimiz bu ve benzeri organizasyonlar ve çeşitli projelerde yurt dışı muadil kurumlarla bir araya gelmek, sektörümüzdeki yerli oyuncuların uluslararası pazardaki bilinirliğini artırmaktır. TÖDEP üyesi elektronik ve ödeme kuruluşları, uluslararası para transferi, cüzdan uygulamaları, ön ödemeli kartlar, POS hizmetleri, fatura ödemeleri ve mobil ödeme alanlarında inovatif ürünler geliştiriyor. Yenilikçi ürünlerin yurt dışına çıkışı, finansal ve operasyonel işbirliklerinin kurulması hassasiyetle durduğumuz noktadır. Değerli konuklar, Türk-Arap Finans Formu'nun çıktıları ile sektöre önemli göstergeler sunarak stratejik işbirliklerine katkı vereceğine olan inancım tamdır. Dost ve kardeş ülke Birleşik Arap Emirlikleri'ne göstermiş oldukları misafirperverlik için bir kez daha teşekkür ediyor. Tüm sektör paydaşlarımıza iyi forumlar diliyorum saygılarımla.
I thank you, Mr. Bilge Tekin, not only for his kind speech, but also leading all the fintech companies joining us today as TÖDEP. So please help me to welcome Mr. Yiğit Yaşar Korkmaz, the Director General of Ministry of Treasury and Finance of Turkey.
Mr. Minister, dear participants, I warmly greet each and every one of you. Unfortunately, our Minister, Dr. Nurettin Nebati, and Deputy Minister Murat Saman couldn't join us today due to their busy schedules caused by the earthquake disaster in our country. However, they asked me to convey their warmest regards. It's a great pleasure to be here with you on the occasion of the first meeting of the Turkish-Arab Finance Forum. As you know, we had the 13th meeting of the Turkish-Arab Economic Forum in Istanbul on October 2022 after a long hiatus. I would like to express my gratitude to Mr. Murat Efe and Al-Iktissad Wal-Aamal group, who made tremendous efforts to organize this valuable forum. I believe that the Turkish-Arab Financial Forum, a new visionary project organized today with competent speakers and participants, will be an important starting point for deepening our financial relations. As you know, we have experienced a major earthquake last month, which was described as a disaster of the century for our country. During this process, our Arab brothers and sisters provided us both material and spiritual support, rushing to Turkey's aid. The solidarity you have shown in the face of the earthquake disaster has given us strength. We are establishing the Disaster Reconstruction Fund. The fund, which enables our cities to recover quickly after the earthquakes, will operate with a transparent management and provide long-term resources for post-disaster recovery. Through the fund, we aim to collect external resources in one hand for reconstruction, infrastructure, and superstructure works in disaster areas. Afterwards, it's planned that the resource will be used quickly and effectively by the implementing institutions, taking into account the requirements of the creditors as well. The contribution from the Gulf countries to this fund is also important to us. As Turkey, we desire to take our relations with Arab countries, especially in the fields of economy, finance, investment, and trade, to a higher level. With the mutual steps taken by our president and the leaders of the Arab countries, our relations have entered a new era. We have various free trade agreements with countries in the Middle East, Gulf, and North Africa. We are working to add new free trade agreements to our existing ones that cover the trade of goods with Morocco, Palestine, Egypt, and Tunisia. In this context, we want to put into effect the free trade agreement between Turkey and Qatar as soon as possible. As a part of this advancement, on March 2023, we signed the Comprehensive Economic Partnership Agreement, which aims to increase our trade volume with the United Arab Emirates to $40 billion within 5 years. This agreement is first of its kind in the region. Unlike traditional ones that are limited to trade of goods, this agreement has a comprehensive structure. We also attach great importance to partnerships with the region's countries and their institutional structures. On March 6, 2023, an agreement was signed between the Saudi Arabia Development Fund and our central bank to deposit $5 billion in our central bank. In March and November 2022, we held joint economic commission meetings with Bahrain and Oman, of which our minister was the co-chair. On December 2022, we organized the Türkiye-Saudi Arabia Business and Investment Forum. In 2022, our trade volume with 6 Gulf countries reached to $21 billion. As of 2021, the direct investment amount that Gulf countries have made in our country is $13.9 billion. There is a significant potential for cooperation between Turkey and Gulf countries in trade and investment. We also hope that Gulf companies will increase their investments in our country in the coming period. Dear guests, as we are experiencing several challenges in the world economy, we need strong, sustainable, and balanced growth more than ever. As the necessity of rapid transition to a greener economy emerges, our preparations for our long-term strategy continue in line with our 2053 net zero emission vision. One of the important pillars of this vision is to develop and expand the green finance ecosystem in our country. One of the notable steps we have taken as the ministry in line with this purpose is the Sustainable Finance Framework document that was published in November 2021. Thanks to this document, we have the opportunity to reach financing from the international environment, social, and governance markets. And last but not least, the social component of these bonds will let us provide better support to those affected by the recent earthquakes. Thank you for your time.
Thank you, Mr. Yashar. When we started this project, and still we are feeling the full support of His Excellency Nurettin Nebati and His Excellency Murat Saman. When I mentioned about 2005, when we started all these projects, our first supporter, first ever, and still supporter was His Excellency Recep Tayyip Erdogan, the President of Republic of Turkey. And along with the presidency, sure, we take all the steps and always together, and will be in the future, together with Invest in Turkey. So please help me welcome Mr. Ahmet Burak Dağlıoğlu, the President of the Investment Office of the Presidency.
Assalamu alaikum. Good morning. Your Excellency, Mr. Minister, ladies and gentlemen. So it is a privilege to be here to participate in this financial forum. But first of all, I would like to remind that we recently had an earthquake in Turkey, and we would like to wish mercy of Allah to those who passed their lives, and we wish a quick recovery for the region. Secondly, I would like to thank His Excellency, Mr. Minister, in person for joining us for honoring this event. And we are thankful him for his recent attempt and the dedication to finalize the comprehensive economic partnership agreement, which was crucial for the development of the bilateral economic relations. Ladies and gentlemen, as you know, the leadership in both countries, His Excellency President Erdogan, President Recep Tayyip Erdogan, and His Highness Mohammed bin Zayed Al Nahyan, have a great vision to develop economic partnership in this, between those countries, to develop those relations in various fields, including politics, cultural aspects, and etc. And we think that this is really crucial given in the context of the current global developments, where the geopolitical risks are rising, where the economic instability is increasing. I think the leadership has decided to create a broader region, not just bilateral relations, to have a more stable environment between economic activity and political activity. So we believe that as the representatives of the business community, we have to work harder and harder to contribute this great vision. Talking about the vision of both countries, we also would like to thank UAE for their recent support to earthquake region, for their sending search and rescue teams, and sending the mobile hospitals, and providing more supports and aids to the region. Coming back to the business agenda, as you may know, Turkey has been attracting foreign direct investments, especially in the last 2 decades. And today we are here to invite you to invest in Turkey more and more. We think that this is the best time, this is the right time. The political background is, I think, ready for that. All the political decision makers are supporting business representatives to increase bilateral economic activity. And I would like to remind you that Turkey offers investors some solid value proposition. First of all, as you know, Turkey is a resilient and fast-growing economy. In the last 2 decades, our compound annual growth rate is around 5.4%. Just last year, the Turkish economy grew by 5.6%. And the second important thing is Turkey has a very investor-friendly business environment. Thanks to the leadership of President Erdogan in the last 2 decades, we committed for economic reforms, and those economic reforms are continuing. So up until now, Turkey is improving her position in many global indexes and benchmarks, and we are committed for investing more and more in developing in the reform agenda, in developing the business climate in the country. Thirdly, which is very important in the current global economy, Turkey offers a deep and competent talent pool. So globally, we are talking about great resignation. Companies are not able to find or recruit the right talent, and it is also a big challenge for them to retain in their organizations. Within this context, Turkey offers a deep and competent talent pool. I think this is an important message for the investors in the region, in the room. Lastly, of course, UAE is also offering a geopolitically strategic location. We believe that Turkey is also offering a geostrategically important location to the investors. I think this is not a competition, but this is a complementary value proposition. Because if you consider Turkey's position, it is at the nexus of Europe, Asia, and Africa, and you can do business with a larger geography if you use Turkey as a hub to access the region. So I would like to end my remarks here, but before ending my remark, I would like to highlight a few points on today's agenda. In the recent years, Turkey's financial sector has been growing, both in banking area and the capital markets area. I think during the discussions we will cover all those aspects. But today there is a active, participation from the fintechs of Turkey. Of course, we have representatives of banks. I see some of them. But fintechs of Turkey has been quite successful in the recent years. And I remember 4 years ago, just before the pandemic, we dispatched a team delegation of fintechs to here UAE, and it was a very successful one. And after the pandemic, we are back here with a larger participation with a forum. We encourage you to have a look at those startups. Let's say some of them are scale-ups. I think their products and services are globally competitive. You can count on them. You can use them. And more importantly, you can invest in those companies because they have already proven their successes globally. With that, I would like to thank you again. Thanks for joining these discussions, and I would like to wish a very successful and powerful meeting. Thank you.
Thank you, Mr. Dağlıoğlu. Actually, it's an honor for me to know Mr. Dağlıoğlu for maybe more than 12 years in the region, and it's proud for me to see all his efforts, what he's doing and his team is doing to develop the economic relations between Turkey and the Arab countries. So, as Mr. Yaşar mentioned, recently, gladly, Turkey and the United Arab Emirates signed the comprehensive economic partnership agreement. We have an honorable guest here who played a key role, an instrumental role to sign this agreement. Please help me welcome Minister of State for Foreign Trade of United Arab Emirates, His Excellency Dr. Al-Zayudi.
Bismillah ar-Rahman ar-Rahim, Excellencies, esteemed guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and very good morning. It's my pleasure to welcome you all to the Turkey-Arab Financial Forum. This is an important body that will assist a new era of Turkish-Arab financial partnership, one that has taken an extra significance since the signing of the historic UAE-Turkey Comprehensive Economic Partnership Agreement. At the outset, I would like to extend my sincere condolences and sympathy to the people of Turkey in light of the devastating earthquake. The UAE and its people stand by you in recovery and rebuilding efforts. The UAE and Turkey relations have witnessed significant developments in all areas of mutual interest. Following the visit of His Highness Sheikh Mohammed bin Zayed Al Nahyan, the President of UAE, to Turkey by the end of 2021. And His Excellency President Recep Tayyip Erdogan's visits to the UAE in February 2022, which resulted in the signing of around 72 agreements and memorandum of understanding in various fields. The UAE has significant trade relations with Turkey, and Turkey is currently our 6th largest non-oil trading partner. Allow me to share some figures on most traded goods. Non-oil trade between the UAE and Turkey hit $18.9 billion in 2022, up by 40% from 2021 numbers. Refrigerators, wires, polymers, rugs, and cars are among Turkey's largest exports to the UAE. Gold, petroleum, electrical boards, gas turbine, and medical instruments are UAE's largest exports to Turkey. Manufacturing and transport are mutual areas of cooperation for Turkey and UAE, which is likely to increase trade in machineries and cars between our two nations. Turkey's service sector contributes 62% to the GDP. However, it has a growing import demand for IT, IPR, and businesses, as well as insurance services, which UAE can fulfill. Turkey's fastest growing imports in 2020 were telecommunications, computer, IT, IPs, charges, and personal, cultural, and recreation services. The UAE has competitive advantage in exporting services to Turkey in the following 6 sectors: telecommunication, computer, IT, transport, business services, insurance services, IPs, and travel. The UAE is now one of the top 10 investors in Turkey, with a total FDI exceeding $4 billion by the end of 2021, with the financial service being prominent recipients of our investment sectors with significant growth opportunities for years outward. FTI to Turkey include agri-food, automotive, renewable energy, ICT, healthcare, financial services, and tourism. Meanwhile, sector with significant growth opportunities for UAE's inward FTI from Turkey include agri-tech, ICT, renewables, fintech, logistics, and healthcare. Excellencies, ladies and gentlemen, building on these existing gains, we have now further elevated this economic partnership to new heights through the signing of the CEPA. The landmark deal has ushered in a new era of cooperation between our two dynamic, future-focused economies. The UAE-Turkey CEPA will remove or reduce tariffs on 82% of product lines that represent more than 93% of our non-oil trade, unlock market access for our industrial and service market, boost FTI into priority sector, and elevate bilateral trade to more than $40 billion in the upcoming 5 years. Besides, it has the potential to create 25,000 jobs between our two countries by 2030. The agreement has significantly improved the UAE export market's access to to Turkey in a major sectors such as construction, metals and their products, polymers, as well as other manufactured products. Apart from liberalization of bilateral goods, services and trade, it places special emphasis on SMEs, ease of working to investors, and strengthening the IP's ecosystem, to name a few. Excellencies, ladies and gentlemen, no doubt we are standing on a cliff of a true golden era of UAE-Turkey economic partnership. The governments have set the stage, and now it's up in the private sector to build on this momentum and maximize these opportunities, not only for the people of both nations, but for the entire MENA regions. Progress as well as prosperity. For those who are coming from abroad, I wish you very fruitful discussion, and I wish you enjoyable stay here in the UAE. Thank you.
Ladies and gentlemen, as we come to the end of our opening ceremony, we would like to show our appreciation to His Excellency Dr. Al-Zayudi, and our appreciation for his support and for being here with us. So I would like to invite Mr. Erkan Kork, the CEO of Payfix, and the Deputy CEO of Al-Iktissad Wal-Aamal. Why they are invited? Because they are the idea owners of the Turkish-Arab Financial Forum, with their encouragement, with their creative mind. So I would like to invite Mr. Erkan Kork and Mr. Faisal Abuzaki. And for the memory of today, this will be our... And if you may allow me, I would like to invite our honorable guests, speakers, distinguished speakers, Mr. Ahmet Burak, Mr. Yashar, Mr. Bilge Tekin, please, and His Excellency Ambassador of Turkey. And the Consulate General of Turkey in Dubai. Thank you, Your distinguished guests and His Excellency. And now we'll have a networking break for 15 minutes, and your coffee will be served. Then after 15 minutes, we'll go on with our panel first discussions. Thank you.
Hello again. Hopefully you enjoyed your coffee. So now we're starting our first panel. I would like to invite Dr. Yusuf Varli, the moderator of this session, and he will be inviting his speaker.
Okay. So welcome all you. So I want to invite Mrs. Ayşe Özden and Ms. Bilgün Gürkan and Mr. Adnan Ahmet Yusuf and Serkan Turan. Please come to the door. Shall we start? Okay. Honorable guests and distinguished audience, I would like to welcome you all to the panel 1, the future outlook of banking in Turkey. And esteemed panelists, welcome to the panel as well. Thanks for your contribution, by the way, in advance. And before I start, I want to send my condolences to who lost their lives in the last earthquake in Turkey. And may Allah give bless and mercy on their souls. And we wish a quick recovery. Okay, so I know that we have actually 45 minutes in the program, and we were 5 panelists, but now 4. And they are all valuable and experienced, very experienced panelists. So actually, like football, I am the referee, and I want to go to the VAR. Where is the Murat Bey? Here. Murat Bey, would you give us some additional time? So otherwise, it's not possible to optimize for the management of this panel. So I hope we can have some additional time. But I will do my best. And okay, let's start. Let me introduce myself first. My name is Yusuf Varlı, Strategy and Business Development Director at Istanbul Financial Center. So Istanbul Financial Center, our project, actually the launch and the kick of the project will be soon, inshallah. Next year or the next time, the theme of this organization might be Istanbul Financial Center, or we can host you in Istanbul Financial Center next time. But this year we are here just for the representation with a moderation. Okay. So then what are we going to talk in panel? In this panel session, we first will try to come up with a picture of Turkish banking sector by assessing the current and the global macroeconomic landscape. Then we will overview the future of banking in Turkey, and also we will evaluate the opportunities that the Turkish banking system provides. And just after that, afterwards, we will little bit mention about the current trends and the innovations in banking. Just after that, we will pass through to the second part of our panel, which is payment and electronic money institutions. And then we will talk about the current outlook and the future of payment systems and electronic money in Turkey. Okay, so since we have some kind of time restriction, normally as a moderator, I prefer to open the discussion, but I want to skip my turn and I waive my part to the esteemed panelists. So we can start with Ayşe Hanım first. Ayşe Hanım, firstly, the floor is yours. But before, so Ayşe Özden is the head of economic research at AT Bank. So by the way, I will try to introduce each of our panelists, but every panelist can start with quick introduction about themselves and the institutions they represent. So feel free about that one. Okay, Ayşe Hanım. So the first question is, considering the Fed and the central banks, central banks' decisions on monetary policies, and also paying attention to actually the last plunge in banking shares, banking stocks in U.S. last week. So what would you say about the global macroeconomic, global economic condition, and what would be the reflections of those situations in the banking sector? So we can start with that question.
It's my pleasure to be here and join you today. I am the head of economic research at A&T Bank, which plays an important role since 1977 in helping boost Turkey's industry and trade for 45 years in bilateral trade between Libya and Turkey, Turkey and North Africa and Sub-Sahara. Regarding your question, when we look at the global economy, looking at the United States economy and of course global economy, I think inflation is the biggest headache and still on the table. And the surprise of the last year was inflation, both for global and domestic economy in the same calendar year. And in 2023 now, all the global economies and global financial markets focus on the major central banks' interest rate decisions. Fed is now slowing down the economy in order to keep the inflation down, but it creates some other problems. Because number one priority, I think, in United States is not the inflation actually, it's unemployment. Since the interest rates are going up, and while you are trying to keep the inflation down, of course it's decreasing, at the same time you are trying to take some action to slow the economy. So it occurs some great number of unemployment. Recently people are discussing and hardly fighting this question in that manner. And Fed now, what is Fed trying to do now? Instead of increase the rates with high level hiking, it tries to make some verbal intervention to the markets in that manner. And in my opinion, the first question is, will the interest rates go up? I can say no, there's not allowed that. And the second question is, what about the inflation? I think globally, inflation will not come down. I mean, yes, it's decreasing. It's peaked in 2023, but it will not come down to the Fed target range, I think. On the growth side, they don't slow down the market because in this way, something worsening. And in my opinion, yes, we will not talk about a recession anymore, but of course there will be a slowdown in United States economies and the rest of the world, but I think it will be mild and short-lived from the European side. When we look at the United States side, when we look at the European side, I think there is still some time to end up the war in Europe. Eurozone economies are dealing with the inflation, with the energy crisis, together with some huge economic problem, both in banking sector and real sector, even bankruptcy. In the coming future, I think, because of the Fed decision, what I expect Fed will make its final rate hike decision in the first half of this year, and then ECB will follow maybe 1 or 2 meetings later, they will stop hiking the rates. And then the banking sector future will change, I think.
Okay. Thank you for a great opening, actually. So the next speaker will be Bilgün Hanım. Bilgün Hanım is the president of TÜSİAD Gulf Working Group and Chief Representative Officer of Bank of Bahrain and Kuwait. So Bilgün Hanım, would you briefly mention about the activities and the role of TÜSİAD in the Gulf region first? And then would you give us some insights on how Arab banks can get benefit from Turkey, and what is the opportunities that Turkish banks or Turkey in general provides for the Arab banks or specifically GCC region?
Thank you. Ladies and gentlemen, I'm also very happy to join this forum. And I again want to pass my condolences to Turkey. It was not only for Turkey, but it was the fourth world disaster. I wish a fast recovery to my country. Coming to myself, I'm, as Yusuf have mentioned, the Chief Representative Turkey Office of Bank of Bahrain and Kuwait, which we have established in 2016. I was already a TÜSİAD member before, and with 2016 and 17, seeing the potential between the countries of Gulf and Arab banks and Arab companies, we decided to establish a Gulf network of TÜSİAD. But first, we elaborate for the ones who doesn't know TÜSİAD. TÜSİAD is one of the NGOs, a voluntary, independent, and non-government organization that is representing the Turkish business world. To give us some maybe figures, our head office is based in Istanbul. We have a representative office of TÜSİAD in Ankara, and we have international offices in Brussels, Washington, D.C., Berlin, Paris, and we have is also a member of Business Europe, which is the leading advocate for growth and competitiveness at European level, as well as business at OECD, businessman, and business B20. The reason why TÜSİAD plays a significant role in the Turkish business economy is, in fact, to give you some figures. Our members consist of 4,500 members of Turkish biggest companies, professionals, and financial institutions. With the companies that we represent as TÜSİAD, we have 50% of the value added, 85% of Turkey's total foreign trade, more than 50% of non-agriculture and non-governmental works, and 80% of the corporate tax revenue. So knowing the strongness of the TÜSİAD, as I said, we have established in 2016 Gulf Network. The main idea or the main reason is to assist our Turkish companies who are operating in this region and to elaborate more point of contact for the companies and parents who wants to invest in Turkey and wants to come and visit and get another point of reference. We are so happy to establish our network. Since then, we have done lots of meetings. We visited this region. And in addition, in 2020, we also established a point of contact by putting a coordinator in the Gulf network. So currently, we are happy to reach out to this region, and we are ready to assist you in any other further to introduce with our members and as well as to assist our members in TÜSİAD to here. We also have lots of members from this region who have invested in Turkey, like Emirates MB, DP World, QNB, just some names that have already members of TÜSİAD in Turkey. And with this, I think I want to also thank United Arab Emirates and Turkey for completing this comprehensive agreement, which will be another era for us, the both regions, to develop trade, finance, and other collaborations together. And maybe tying this to the second question of Yusuf Bey, as I am the chief representative of BBK Turkey Rep Office, I was established the Rep Office back in 2016, and I have seen that my board and CEOs did a very correct decision. As you all know, Turkey is a strategic country. It's one of the fastest emerging markets since decades. And currently, they were already working with Turkey, but they didn't have a team on the local ground. After they established the Rep Office, this gave lots of advantages to my head office. And personally, I lived and seen the advantages, and one of them was, of course, you can work from here and come and fly to Turkey, but being on the local ground means you have access to information on a daily basis. And this provides my head office to take timely and fast execution on the correct matters. As well as we have lots of Turkish companies and corporates and banks on the local ground. This gave us to establish bilateral relationships as well as to introduce Turkish companies to our BBK jurisdiction. So with this platform, having rep on the office provided lots of opportunities. And maybe one more addition. Currently, I know most of you have either direct or indirect investments in Turkey. But currently, having from here, you can look at the secondaries, you can participate in the syndications. This is very correct strategy if you don't have a team on the local ground or if you don't have a rep office. But if you do want to do further business, which I think all of our bankers are trying to diversify our assets, risks, increase our revenues, then I would really urge you to look for other opportunities like my bank did and open a rep office. In our time, investment presidency of Republic of Turkey was quite assistance to us to get the license. And now we are also lucky because now we have financial center, whom moderator is part of the head of strategy group. Now with Istanbul Financial Center, we also provide lots of other benefits who are interested to come and invest and start looking to maybe open a rep or even come and search. Please let me know in the coffee break now or later if you have any other questions that can I assist you. And also catch me. With this platform, I think it's a big gathering and big chance for all of us to be together. And I would like to end my notes by thanking you and also hope to meet with all of you as the leaders and participants of Arab banking world.
Okay, thank you, Bilgin Hanım. So this quick answer and your comments. So Bilgin Hanım, another question for you. I actually know that you have several roles, several positions in the sector and in some associations. So considering this, would you give us some insights about how can Istanbul Financial Center position itself in banking? So you can separate like conventional and the participation banking, so it depends on you. But in general, how can Istanbul Financial Center position itself in banking?
Okay. In fact, according to international benchmarkings, Turkey banking sector is still modest and there has lots of room for further growth. In addition, as you have mentioned, participation banks, which I'm sure Mr. Yusuf will add further on me because he's the expert in this area. But from what I see as a banking professional, we have been successful in bringing Islamic finance to Turkey, but our percentages are still small. And this region is one of the biggest regions of Islamic finance. And of course, with Turkey, have 85 million of people living. We have thousands of big corporates. We have lots of small corporations. Our clients or banks being exporters and traders have lots of room to utilize new products of Islamic finance. So with this angle and Islamic Financial Center, we also would advise, especially participation banks, to look at and consider. For example, we have Dubai Islamic Bank's rep office in Turkey, but we don't have that much other rep offices from the participation banks. So I would advise everyone to look from this angle and bring and increase the potential of Turkey and between this region.
Okay, thank you very much. So at this point, just a quick synopsis about Istanbul Financial Center. So as Istanbul Financial Center, our main focus lies on like a tripod. So we have three main pillars. One is Fintech. Actually, we want to become one of the prominent financial centers on Fintech. And the other pillar is the participation banking, like you mentioned. And the last one is the sustainability. So the sustainability actually is kind of horizontal line for all the aspects that we are going to take steps in our strategy. So I just wanted to mention that quick synopsis related to Istanbul Financial Center. Okay, our next speaker will be Mr. Adnan Ahmet Yusuf. Actually, no need to introduce him, Mr. Yusuf, but for whom may not know, have enough information about him and his career. So I just want to give a quick introduction. So Mr. Yusuf, a prominent figure in the Islamic banking and financial services industry, has more than 30 years experience in international banking. Along with his career, so on C-levels, on different C-levels, on banks such as Al-Baraka Group, he received many awards and has been holding several positions in the sector, in associations as well the governmental bodies. He currently contributes the sector as the chairman of Bahrain Association of Banks. So, Mr. Yusuf, I would like to ask you first that what are the development areas in Islamic finance or participation finance? So related to this question, I may open it. So it would be great if you can mention that whether Islamic banks can catch or keep up with the current trends, current innovation trends in banking sector, especially comparing to the conventional one. So what can you say about that? So how is their current situation in terms of technology and financial technology and innovation?
Well, thank you very much. First of all, let me, convey my condolence to the people in Turkey and Syria for the loss they have suffered. And inna lillahi wa inna ilayhi raji'un. This is part of the life. Second thing, I have to also to mention to you that I was the chairman of Al-Baraka Turk, the participation bank in Turkey, for more or less 20 years. And before that, I used to work in ABC for 20 years, Arab Banking Corporation. But, for many of you, maybe it is a good information also. I'll let people know. The first banking business started with Turkey from the Arab side. It was 50 years ago. It was in 1972. And it was the cooperation between Libya and Turkey, Arab Turkish Bank, which is right now operate in Turkey. Arab Turkish Bank was established by a gentleman, by a banker called Mr. Abdullah Saudi, well-known person. And he used to be a very close friend to Rahmatullah Ali, Turgut Özal, the Prime Minister. I used to visit Turgut Özal and his brother, Yusuf Özal, Rahmatullah alayhim, in Al-Harbiya building, which is next to the Hilton building, along with Mr. Saudi. As far as the participation bank, Al-Baraka Bank has been in operation for almost now over 25 years, from 1985. And it done a very good job. When I joined as a chairman, Arab Turkish Bank was focusing on the commercial facility on the corporate side. And they used to have about 20 branches. What I did is I turned it around and I put the retail side of it. And we expand in Turkey over all the cities. We used to have 240 branches. It tells you that, the expansion of the participation bank. But the idea of the government in Turkey, they need the participation bank to be more contributing to the economy. Unfortunately, they never reach more than 5% of the banking sector, which I believe that with the time they are involved, 5% is not small, but it is not big. I observe in Turkey, because I work in Turkey from 1982. The first transaction which was brought Turkey to the international market, I done it in 1982, TC Zaraat Bankazi, $125 million. This is for the history. People has to know about it. Turkey needs three things to control. It needs the inflation, which was stated, and it needs the devaluation in currencies, because both of them are linked together. And it needs big financial institutions. Turkish institutions, whether Islamic or non-Islamic, all are small still for a country the size of Turkey. I think that you need to merge certain banks together to bring a big institution to the market, number one. No need to increase the number of banks. You first merge banks and then you increase the numbers. And two, bring specialized banks as well. Turkey they need investment banks. They don't have a good investment bank, by the way. The investment banks, they can bring investor to Turkey. But one of the things which I did mention it earlier, Turkey need to review the bank's investment within Turkey. Yani when I invest in Turkey and I convert my capital from dollar to Turkish, immediately I lose 50 or 40% because there is a devaluation in foreign currencies, in the local currencies. So you have to protect the investors. How you protect the investors is banks which is created by foreign investments, part of their capital should be in dollars. And no need for the capital to be converted in Turkish. And also you can create preference shares, subordinated loans, all these kind of things. It could be done in foreign currencies. Unfortunately, Turkey abide with the normal classical laws where if you are a foreigner investor coming to Turkey, you convert your capital to the local market and then that's it. I think this is an old now style. It has to be changed. I think that many banks from this part of the world, and I have to tell you the truth, they have already lost their capitals. Why? Because of the devaluation of the currencies. But therefore, I believe, I'm a great believer that Turkey is a great market. There are free markets in this part of the world. Turkey for investors. Turkey, Saudi Arabia, and UAE. These are markets which will attract foreigners to this part of the world. For Turkey, I think that if they control both the inflation as well as the devaluation of the currencies, I think that they will attract more investors to Turkey. As I say that Turkey in the right location, right the number of people, 80 million, 90 million, and they are growing. And it has a very good relationship. Yani, I can tell you that, Turkish Airlines changed the whole world. I remember before, we don't use the Turkish Airlines. Now Turkish Airlines is the best among all the airlines international. But therefore, Turkey has a lot of success, has a lot of element of success, but it needs kind of a push again. I'll tell you a story. 1984, I visit Rahmatullah Ali Turkish-Arab. I was along with the president and chief executive of ABC, Abdullah Saudi, who create Arab-Turkish Bank. And they are both very close friends, as that's why they address each other with his first name. The prime minister addressed Abdullah with his first name, Abdullah. Abdullah asked him, why you spend too much money on building infrastructure in Turkey? This does not give you a good return, and most of the infrastructure, you borrow it commercially, commercial loans. Turkish-Arab, rahmatullah alayhi, respond to him. He looked like he was a little bit upset. He said, Abdullah, I have products which is agriculture product, grown on the east of Turkey, and I'm exporting it to Europe. If I don't have a very good infrastructures, roads, logistic, storage, my goods will arrive to Europe, but it will be thrown in the sea. I have to build this infrastructure, and I think that he was correct. Now, after 30 years, I see what he done in the past. It was for the benefit in Turkey. Now, many of Turkish people, they don't know that when I used to visit Turkey, there was no airport, no cars, no transportation, no communication, no water, no electricities. MashaAllah, all these things has been done. Now Turkey is better than the European countries as far as services, as far as infrastructures. So I think that Turkey has a lot of potential. It needs just kind of changing certain laws. It needs to sit with foreigners. What is your problem with us? Where we went wrong? How we can improve our systems? these are the things which I want just to pass it. As far as Islamic banks, I think that we done a good job in Turkey, but still we are within the 5%. We should go to the 10%. If we reach the 10%, it will be good. And I think that also I will encourage Islamic bank to merge, because there is no need to have few banks with the small capitals, and beside the small capital, their product is limited. I believe that Islamic banks as well as commercial banks, they should review their thinking, their strategy, and they abide or they have to follow what we call it the merge. Thank you very much.
Okay. Mr. Yusuf, thank you for your contribution. So I just want to add something on what Mr. Yusuf said. Actually, we talked before the panel with him. I just want to announce that actually. So one of the topics that he mentioned that for the foreign currency in Turkey, there are some hardnesses, but in Istanbul Financial Center, actually we have our own law, and in that law, there is an item which is about the incentives, the operational incentives. So when, according to that law, when a company launches in Istanbul Financial Center, then they can keep their books in foreign currency. So this can help them to decrease their hedging costs, like Mr. Yusuf said. So, and also I understand from what Mr. Yusuf speak, so Turkey is not aware of Turkey itself, right? So you are saying this. Okay, so Mr. Yusuf, I want to address the same question I asked to Begüm Hanım. So what are the opportunities of Arab banks, specifically in Turkey? So like you said that there's some kind of shortage in investment banking compared to the depository banking. So for example, do you think that is any Arab bank or the bank from the GCC can fill that shortage?
I believe that, yes, you know, that we can create a bank between the Turkish private sectors, banking sectors, and the Arab sectors, because there is a lot of potential. Turkey is becoming an industrial country, and there is a lot of potential whereby I have a factory in Saudi Arabia, produce certain products, and there is another one in Turkey which can produce another product, part of the product in the factory in Saudi Arabia. How we can put them together? We put them through the investment arm. We should create an investment bank located in Istanbul, reviewing the potential of bringing investors, whether from the Arab world, but it will focus on the Arab world, to the Turkish. But as I say that, this is always you will have it is the foreign currencies limits. Unless you think about it seriously, they will not come to you or they will not invest in the Turkish market unless the currencies is protected. This is also one of the problems we have it in Egypt. Egypt also, with the devaluation in the Egyptian pound, has put investors outside the scope of investment or investing in Egypt. Why people they invest in the Gulf? Because the Gulf, their currencies is fixed. So therefore, devaluation is not there. So I believe that it need an investment bank, it need another gathering like this, focusing on what is the laws to be amended in Turkish to enable banks, companies to invest in Turkey. I can tell you that there was an investment bank, I don't want to mention the name, they bought certain companies in Turkey, but they were complaining to me, they say Adnan, because they borrow from us when I was in Al-Baraka Turk. They say that, Adnan, we lost half of our capital in the devaluation because we are dollar-based company and our investment is Turkish. And when we converted after, we found that, you know, we lost more or less 40 to 50% of our equities just in the devaluation of the currencies.
Yeah, we actually totally aware of that. So we actually, with the help of the Ministry of Finance, so we are developing some new tools in Istanbul Financial Center and in Turkey general. So, okay, same question for Ayşe Hanım. By looking at the microstructure and the outlook of banking sector in Turkey, so how would you evaluate the future of banking? So it can be, again, the conventional and the participation banking in Turkey, and what are the opportunities here?
I can answer these in two ways. The first one is specific to ANT Bank, and the other one is in general. As ANT Bank, since our subsidiaries are in almost every part of this area, this geography, so the communication, the fundamental issues, and business managements are very quick, sustainable, and effective, both for us and the other party. I think this is great and very most important advantages. In general, like the most of global economies, although Turkey is struggling with pandemic, earthquakes, and geopolitical issues, economic fluctuation, even volatility in financial market, the crisis management, crisis experience, even turning this crisis or turning these challenges into the opportunities is more than in any countries. And I can add this Turkey's geopolitical location and being the financial and trade center and the country's ports and their capacity and being the fastest growing economies among the emerging markets and developed economies and having the young populations, I think all of them provide significant opportunities and advantages than many countries, over many countries.
Okay, thank you very much. So then I can change the topic. So we can switch the main topic to a topic a little bit, actually. I would like to give floor to payment systems and electronic money in Turkey. So Serkan Bey, General Manager of FastPay. So would you, Serkan Bey, would you initially introduce you and your company briefly? Then I would like you kindly to present the current structure and the picture of the payment system and electronic money market in Turkey. So actually we previously get fruitful information from Ufuk Bey, but I mean, would you elaborate it, please?
Hello, everyone. Dear ladies and gentlemen, thank you for listening for this session. I'm very happy to being here for today. Let me introduce first of all myself. This is Serkan. I'm working in a financial industry in Denizbank, and I have more than 20 years experience in financial industry. Today, I have two hats in here. One is a Denizbank Financial Service Group, and the other one is FastPay Financial Electronic Money Institution. So, and also I'm representing our Financial Services Group CEO, Mr. Ateş Hakan Ateş. I would like to start with a payment system in Turkey. There are too many companies recently licensed from the Central Bank of Turkey. So the fastly growing industry in Turkey at the time being. So especially the payment systems are fastest growing part of the industry. When we compare with the traditional banks, you know, the innovation transforms industries, and banking sector industry was no exception. For the last over decade, we all know we are now carrying the banks in our pockets. So also the e-money companies are start to compete with the traditional banks, especially for the virtual POS side, because there was a big gap and there was a big empty side for the payment systems. So the e-money companies now taking the lead for the time being and rapidly growing and rapidly taking the lead for the payment systems currently. And also the FastPay. FastPay was born in Denizbank in 2012. It was just a small mobile app, mobile wallet at that time, and that was the first digital wallet product in Turkey. And now this is a licensed e-money company, which is granted by Central Bank of Turkey. And also we are in the sector in order to gain new customers for our financial services.
Okay, so Serkan Bey, I have another question. We would like to hear some comments about the future of payment system and the electronic money institutions. So you can also give us some insights related to how innovation you are using in your, company as a company or in general. So would you just answer that question?
Let me give general information about shaping the future of financial industry first of all, and then I can add some things regarding to e-money institutions. So I'm sure that many of you have heard about the ChatGPT recently. So what is a ChatGPT? ChatGPT is an intelligent artificial based program, and you can ask many of things and we respond a wide range of answers with ChatGPT infrastructure. So we asked the ChatGPT the shaping the future of the shaping innovation for the industry, financial industry, and it gave some answers to us. One of is the fintechs and startups. The other one is blockchain technology. A third one is artificial intelligence and machine learning. And the fourth one is mobile banking. And finally, fifth one is open banking site. And I am very proud of with these answers because that Denizbank has foreseen all the answers which is listed and answered by the ChatGPT. So let me give example for the fintech startups. Generally, as you know, fintechs are very aggressive and disrupting industry and can also easily compete with the traditional banks for the time being. But in Turkey, Turkey is a really advanced market when we compare the European emerged markets, and we can easily implement the rules and the regulations when we compare the other countries. And also the Turkish banks are very collaborating with the fintechs and the startups. So, as I mentioned, the FastPay was once a Denizbank product, and now it's an e-money institution, which is granted by its Central Bank of Turkey. And also, there are too many fintechs are ready to spin off in our bank and in our sector. So, when we think the other side, for example, mobile banking. This mobile banking, as you know, with the pandemic time, many of the people are trying to use the mobile banking, mobile apps with the bank. So now Denizbank site, we have 5 million active customers, and last year we gained more than 500,000 people with this mobile banking technology. When we come back to the e-money institution site, the e-money institution site in Turkey, there are now 74 payment institutions currently. So there is a huge opportunity in Turkey at the time being. So we are trying to add some values, thinking our own financial group in order to grow the sector.
Okay, Serkan Bey, last question, but I mean, waiting a very small answer. So what does Turkey offer to international investors, especially the investors from GCC, in terms of your sector, payment system? So I know that your sector getting foreign investment, actually. So, but in general, what can you say about that? What can Turkey offer?
There are too many sectors for the foreign investors in Turkey. Recently, new regulations has launched in Turkey, digital banking, open banking, and service banking modeling. So, sorry. So you can easily set up your financial industry in Turkey, because nowadays you can also make all the financial features without any physical branch in Turkey and with a $100 million investment. So it is also easy to enter the Turkey with the new regulations, thanks to new regulations, because new banking regulation has new come, and also it has many capabilities, no missing function with the traditional banks.
Okay, last question for both.
And
Okay.
little information. Also, this regulation is enabling the digital participation banks at the same time.
Okay, last question before finishing. The question for both panelists. So the question, and again, I'm waiting a very small answer, please. So what can, or what does, or what can, how can your sector or your company specifically contribute to the GCC and Turkey ties? So Mr. Adnan,
yes,
we can start with you. So how your, I mean, association or in general, so how can you contribute to the Turkey and GCC tie?
Well, I believe, I think that I work very hard in pushing the Turkish business to the Arab world. And as I say that the first transaction which brought Turkey to the international market was done by me when I was in ABC. I love Turkey, by the way. I have a lot of good feeling that Turkish can do better than what they have right now. They are in the right directions. The Fintech things and all these kind of things, this can also create a lot of potential. For example, I remember in Bahrain, now we don't pay by cash or by check. Everything is done by benefit pay. You can pay up to $3,000 an immediate transfer, okay, on the spot, and open the next day. That means if you want to pay more than $3,000, it will go to the account of the beneficiary the next day. So I think that if we take this kind of experience, we have it in the Gulf, see how does it fit in Turkey, and we take certain Turkish practice and products and bring it to this part of the world, I think this is something which we can create it. One of the things which I always want Turkey to see, to do it, is the SWIFT message. I think that we have to look to the SWIFT message within the Arab countries, within the Middle East on its own, because we don't want to be quoted like what happened in the previous, whereby the SWIFT company just decide not to accept certain partner or parties. But I think that we should have our own SWIFT block within the Middle East. The rating agencies, I think that President Erdogan was always having this kind of thing that, we should have our rating. And I think that he was correct. I mean, why Turkey, depend on the foreign rating, to rate their companies. They should have their own ratings, both Islamic rating as well as the commercial. But I think that these are the things these kind of ideas, it will always come from such kind of gathering. And once we finish these meetings, I think people has to put all the recommendation, all the ideas, and then start following it up with their concern. But as far as me, as Adnan, I'm always, putting Turkey as my priority in the business. Thank you.
Great suggestions, yes. So, Begin Hanım, what can you say about that?
In fact, in the first question, I elaborated a little bit, maybe to give more detail. As I mentioned before, we were already working as Bank of Bahrain and Kuwait in Turkey, but after we opened our rep office, we increased most probably 4 times the collaboration between the Turkish corporates and banks being on the local ground. So it gives a big advantage to establish bilateral relationships, and it will be a more sustainable development of relationship through this way. As well as the companies, especially Turkish companies, in the last 10 years have been investing and opening also offices in this region, doing exports. So we were able to introduce our Turkish corporates with our own jurisdiction. And seeing this potential, because I really believe there is a great potential that we need to work all together to further collaboration. I also have a head of Foreign Economic Council, Bahrain Turkey Business Council President, maybe for the ones you know, Deyik. We have visited most of the banks in Bahrain, in addition to my own bank, to explain the benefits of using country limits directly to the country itself, rather than only buying secondaries and participation. As I said, it's of course valuable, but why not come and have your own bilateral relationships and continue to do more sustainable relationships? So, as I said, I believe there is lots of further areas, as Mr. Yusuf mentioned also. This kind of platforms, gatherings, will assist us to do further, so we will have lots of new projects, hopefully, all together.
Thank you very much. And Ayşe Hanım, just quick answer.
Okay. From my side, view of the economic side, as everybody knows that Turkey, we experience the strongest and very terrible earthquake in 10 provinces. And now it's hard to estimate or calculate the cost of this disaster on Turkish economy. I think we will have to wait for a while and see the big picture. But considering the next developments, leading by banking sector, first of all, construction will be on the table for coming years. And not only construction, steel, food, textile, many others, you can add many others. There will be a heart of core economic developments and conditions for Turkish economy.
So it requires some financial background, and GCC may support on that one as well. Yes, you are right. And Serkan Bey, lastly.
Yes. Finally, still Turkey has a great opportunity at the time being. So there are too many opportunities for the financial industry, such as if you don't need to invest some capital in order to enter the market. So we have some really good solutions, especially we are bridging the wallet as a service and banking as a service functions at the same time. So the foreign investors can easily enter the market, especially maybe you know Turkey has a wide unbanked population with a 30% of the current population, and it was a record of the World Population Report. So many of the new generation are still wants a financial opportunity for the investors or many new opportunities who will enter the GCC region or something somewhere else.
Okay, so thank you very much for every panelist. I think this panel was contributive for all the audience here. So let me recap or summary what I understand from this panel with 2 or 3 sentences. Okay, I first understand that although there is a good ties, not only financially or politically and also economically, there is a good ties, but I also understand that there is a room to go, so which shows us there is a good potential here at the same time. And institutions, not only the products, but also the institutions, associations, and other institutions that may help us to develop the ties between GCC or in general Arab countries and Turkey. And finally, I can also say that since I am the representative of Istanbul Financial Center, I can also say that as Istanbul Financial Center, we are ready to move up this potential for the ties between GCC countries and Turkey. Okay, so this is the end of our panel. Again, thank you very much, our panelists. And for the audience, thank you as well for listening us, and also for the organizers to have us here today. Thank you very much.
Thank you. Thank you for this comprehensive session. We are running a little bit late, so we'll move fast to next, our fireside chat, use of private equity and venture capital to promote economic growth in Turkey and the Arab world. Mr. Salim Ahmed will be moderating Mr. Ihsan Sanjay, Head of Private Equity Camco from Kuwait. Please, guys, join me on stage.
Chairs, yeah? Only, hello. Mr. Hassan? Yes. You want to?
Oops. Yes, I missed my name. Yes.
Hello, ladies and gentlemen. Good afternoon. I think it's the right time, especially after a wonderful session with the previous audience. Ms. Bilgun, Mr. Sarkan talked a lot about how Turkey is welcoming investments, the collaboration between UAE and here. So our panel is to discuss now the right topic of using private equity and venture capital to promote economic growth in Turkey. So this is an interesting topic. So before I start introducing myself, my name is Salim Ahmed. I've been in the Middle East for close to 30 years. I've been the ex-chairman of the UAE Banking Federation's Digital Committee. I've also worked in the Arab Monetary Fund Fintech Working Group. So I have a little privy to the kind of fintech developments in this sector, in this part of the Arab world. So I'd like to, it's an honor to have Mr. Ehsan here, who's also the Executive Director of Private Equity in Camco Invest. A few good things about you, sir. Me, over 23 years of private equity and corporate finance experience. He's managed the investment process of several high-profile transactions in Turkey and GCC region. He has taken part in the evolution of the private equity industry in Turkey. And you've steered some landmark deals and sectors such as finance, entertainment, retail. So it's an honor, sir. Welcome to the panel.
Thank you. Thank you. Same honor with you as well, Salim. Nice to meet you.
So without further ado, let's get into the questions. Okay. Now let's talk a little about, yes, we're talking about promoting VCs and private equity in Turkey. Before we go there, let's talk a little fundamentals here, Mr. Hassan. Do you think VC and private equity are important tools compared to the normal sources of capital sourcing? And how do you differentiate them? So let's talk of fundamentals before going into the deeper detail.
Yes. Actually, Salim, the most ongoing discussion happening around the private group is what is private equity, what is venture capital, and how you segregate that. And very basic segregation of venture capital and private equity we can make now is venture capital is all about there should be technology in whatever you are doing. Versus in the private equity area, we are talking about more like fundamentals, historic growth rates, management teams working together. So the fundamental theory is more when we are talking about the private equity. But when it comes to venture capital, generally, history either is not there or about to be there, but you need to trust for the future. Because you are talking about entrepreneurs who are the backbone of all the ecosystem. You need these guys, you need these entrepreneurs, which are coming with the new ideas, which are coming with a new way of doing businesses, and they are very ambitious, they are very passionate. But for private equity, it's old school for these guys, because you're asking about fundamentals, you're asking about historical growth rates. They don't understand from this. They want to talk about future. They want to talk about trends. They want to talk about distortion. That's why venture capital is very increasingly superseding asset class. Because when we are talking about alternative asset management, in the developed part of the world, this starts to constitute around 45 to 50%. If you look at the Cambridge Associates numbers, we are talking about some big institutional clients have at least around 60, 65% up to exposure to alternative assets. I am carving out the real estate, which I will talk about it very shortly, which means alternative assets are becoming inevitable fundamental asset class happening around. And venture capital and private equity are two landmark sectors in this industry. So these are the basics of PE and VC. But coming back to the region itself, Mr. Adnan in the previous panel was continuously talking about the region, Türkiye or itself needs investment bank. Actually, it needs much, definitely investment bank is required, but much more than this. This in the region, this industry, this world needs an understanding of where the world is going, where the future is going to be, where to put my money to benefit from all the changes. Because let's not forget about one thing. What is driving all this capital? Innovation, trends, future. And we are living in a world that the population will change. This generation X, Y, Z, whatever you call, is living in a totally different expectational level with totally different ambitions. If you understand this, call it venture capital, private equity, investment bank, trade finance, whatever it is, you're going to make money and you will be in the line with the trends and developments. If not, if you will not hear this, if you will not see this, you will witness someone else doing this, making good returns on this, and you will put an applause or criticize. That's the truth story, basically speaking.
So, Ehsan, I have a nice, I'm going to debate with you now, okay?
Yeah.
Okay, yes, private equity and venture capital are here to stay. Yes, you talked about private equity being more old school, right? Now, you've seen 2022, right? Fintech deal activity just, I would not say crashed, it dropped like 55% compared to 2021.
Yes.
If you include private company financing, M&A and IPOs, we're talking of volumes of $520 billion. It has now come down to $217 billion in 2022.
Yes.
Yes, we can say high inflation, rising interest rates, fears of recession, all of that. And you're seeing layoffs, you're seeing the mindset of people, right? Growth at any cost, right? I mean, valuations are like crazy, sky-high valuations. Now, in this climate, right, investors the VCs are tightening their belts, questioning promoters, questioning the founders, etc. So what would you, in current climate, I'm sure the fintech trend is increasing, the 2023 promises to be better. In this climate, what do you think would be an important criteria for investment vehicles like private equity and venture capital to look at before they invest in a structure?
Yes. Actually, a very critical question, because from that side, we need to differentiate trends and we need to differentiate the fundamentals and factual things. If we are talking about fintech, I think 6 months ago, we were in a conference in US, and people were talking about fintech in a just coffee chat. I asked one of the guys, I will not name the company, but guys, you are talking about fintech all around the world. So you are talking about billions of dollars. So what are they doing? So what is this fintech that you are talking about? Can you explain? He said, you know what? Students living in the US, when their money transferred from outside, it takes them 6-7 days to get their money. And we are living in a world, in GCC, in Türkiye, that this is just like a lullaby. You know, no, our systems are much more functional. Our systems are much more developed. So what they're saying is, we are just fastening everything from A to Z. And let's not forget one thing, that the most fundamental industries which are in the world for a long time will be disruptive mostly. Because Industries are thinking like, we are too big, nothing is going to change, so we have a customer base, we have a churn rate low, loyalty, no. Destruction will happen so quick. So when you see the fintech specifically going around, what you are seeing is, as of today, fintech is kind of a mixture between innovation and creating an ease. Let's not forget one thing. Everybody is running for one thing. Let's make one click easier. That's all the job. What did Zoom do that Skype didn't? One click easier. One click easier. One step easier. And I think innovation is all about this. If you make it one step easier, this is innovation. And this innovation will follow by the capital. But IPO, you made a very critical thing, IPO. For me, and this is my personal opinion, and I'm sharing this opinion with my company as well, IPO in our region is just like an elevator door, It opens, you see it opening, you try to jump out of it. If you can do it, it's good. If you cannot, sometimes you can get squeezed in between, but sometimes this elevator is open for a while. Because why? Our capital markets, like our private equity and venture capital markets, are not 100% established. Fundamental investors are there. Opportunistic investment are generally there. Okay. Should I invest for 6 months to 9 months? I make my 20% return, then I will exit. No one, maybe including ourselves, when we are choosing a stock, are thinking like, what is the balance sheet? What are the next 5 years? So if I invest my capital here, how will this growth is going to happen after 6 years so I can leave some legacy for my family? No. What you're saying is it cheap? 15% discount? So what is the lock-up period? 6 months? Okay, let me buy it.
It's almost instant gratification.
Exactly.
Right? Yeah.
Exactly.
That's true. The behavioral aspect is also driving the market still.
Yes.
Yeah, wonderful. Great insights here. So let's now talk about Turkey and the Arab world for a minute, right? See, in the Arab world, yes, if I take the example of the United Arab Emirates, the accelerators, the vehicles for VCs and private equity players are booming, right? Yes, we have the Mubadalas of the world. We also have Tiger Global here. So many people are setting up offices here. There's ease of business here. And there's also this preponderance of family offices, right? That is quite unique to the Arab world, right? I would say, in my personal opinion here. So, and yes, I've interacted with a few family offices. They deal with sophisticated money. I mean, it's not like, hey, give me a bag of cash to you. There's a lot of sophistication around it. They invest in good vehicles here. So with the Turkey in the earlier panel talked about the government introducing a lot of change in their laws. There's a lot of business in ease, etc. So in the light of the family offices, if you want to advise an investor sitting in this room, or a private equity or a family office sitting in this room, how do you want them to approach the Turkey system for potential investment opportunities? It could be pan-sector. It need not be necessarily fintech, but from a Turkey geography point of view, yes, Turkey aims to be the financial hub for the EMEA, right? That's their vision also. So yes. In your view, how does that dynamic play here with the family offices and with respect to how can they benefit from the Turkey ecosystem? And what do you think, let's say 5 points, what they should look for?
Yes. From that perspective, I think this is a very critical question. I think this is one of the biggest difference between Turkey and the GCC, family offices, yes. And we will talk about it shortly. This is one of the fundamental differences. Why? Because we are, as Kamco Invest, we are doing business in Turkey and GCC. So I am managing investments in Turkey, GCC, VCP, all the angles we are there. But when you come to the family offices, the clear distinction is here. Turkey, for the last 35, 40 years, since I remember myself, every 4 to 5 years, correction happens, some kind of inflationary adjustment happens, market constructs itself again, re-evolution, evolution, de-evolution. So from that perspective, Turkey is coming from a historical legacy of dealing with ups and downs and currency. Yeah. What am I trying to say is this: there is no capital accumulation in the family ecosystem in Turkey, other than some selected big families. And when you see these families, they generally act like this, what are they're very opportunistically, very rightfully. So what are the winning industries for the next 5 to 6 years? So where should I put my money? Because let's not forget one thing, everybody is looking for a return. Yep. Sometimes more modified, sometimes more aggressive, sometimes more soft, but we are all looking for a return because we are working and we want our money to work as well. Yep. But from that perspective, Turkish family office ecosystem, I can say briefly, is lying between does not exist or about to exist level because of this capital issue. Because these families are supporting their businesses with all the cash. They pass through so many hurdles in the history that they need to utilize all their wealth to support their existing businesses and opportunistic investing in some other areas. Versus in the GCC, we are seeing a very fundamental and established family offices. This is a big difference. When you go them, they understand what you are talking. They invested in the industry before.
Yes.
They invested in some of the fundamental areas. They know what are the areas there. But in Turkey, when we go to the family office, CFO calls us after 5 minutes. Why did you talk in this industry? You make a problem. Because the boss is doing like this. Oh, they are talking about private equity. Why don't we do private equity as well? So they are talking about opportunities in ABC industries. Please look at these industries. Let's invest them. So there is always like this opportunistic approach because they don't know how to make these investments. They don't know how to be an ally with a private equity group to get benefit of this. Because let's not forget one thing. Knowing an industry versus knowing the structure and some systematic approach to make a return are two different things. Sometimes when we become a partner with the family office in a specific deal, they come up very openly and saying, guys, we know this industry for a long while.
Okay.
But I understand with your investment mechanism and tools how to make money in this business much brightly after becoming a partner here. Versus here, we are talking about histories. We are talking about returns. They really know what they are doing. So from that perspective, if you want to convince a family office in the GCC region, you need to talk this language of their language because they know what they are doing. They know what we are telling.
And that's where I think organizations like yours would play a role in providing that advisory to family office. Hey, you want to make money, quick money, a slightly high in risk return, ratio, but I think that's a good point you make, that having, speaking their language.
Yes.
And with the ecosystem play, with partnership play is the way to go.
One point is critical, Salam. Before I forget, I'm sorry for this, but let's not forget one thing about this region's family offices. I think this is the only question mark happening around, which is family offices around the GCC, I can say more than 60%, 50, 60% of it get caught in the wrong timing in some of these products. Even the private equity, when everybody hype is going and everything is coming down, they invested and they lost the money. In the venture capital, in the wrong time of the venture capital area, without taking the appropriate risk, they think they were investing with the right people, and some part of it lost the money. That's why the skepticism is increasing. But these products are developing. So this is not the same products like 15, 20 years ago. This is developing. More measures are there, more systematic approaches there, but you are still living with your skepticism that you developed 5, 6, 10, 15 years ago. And what are you doing? Let me do what I do best. What is it? Real estate. What is it? Liquid funds. What is it? Something tangible, then I can exit. Because let's not forget one thing. Our product group, PEVC, is a long term. So there should be a portfolio theory.
You say a good point, right? You're saying that knowing where to invest is key, right? Yes, there are typical asset classes, real estate, commodities, whatever, right? So in your experience, Ehsan, let's talk Turkey for a minute here. What do you think are the best sectors for investment opportunities in the long term? Yes, I'm not talking about short term. Yes, we know the fintech industry in Turkey is booming. I've personally seen Turkish companies, I'm talking about 10 years ago, having wonderful software which is being implemented in banks here. So from a country perspective, what do you think are the sectors which are going to grow in Turkey specifically and are good for private equity and venture capitals to benefit from? It cuts both ways, but what do you think are the industries you think are better?
Again, everything is starting with fundamentals. So where will be the distortion happening? So let's see for the last mile delivery, for example. Okay, what are the unicorns happening for the last 5, 6 years? Yemek Sepeti with Delivery Hero, Getir with many of the international investors around the world. I think it was around, I was just reading in a report that the average time from 0 to decacorn nowadays in some of the deals that we are seeing in Turkey is around 5 to 6 years. In some of the gaming transactions, it is 18 months, 24 months. So from that perspective, when you see for a long-term horizon, what will be the winners of the long term, we are still thinking about the fundamental need of where the distortion is happening. So, healthcare. Okay, if you talk about healthcare, this is one of the oldest industries. There are too many hospitals. But where is the technology in these hospitals? Exactly. Where is the technology utilization? Where is the stock control? Where is the working capital management? Where is the utility management? How many hours this doctor is spending versus how many hours this nurse is spending? So this is developing very heavily. But no one is talking about this. But we are a player in this industry. We are seeing a big fundamental change. Big fundamental change. Now we are talking about not post-trauma therapies. We are talking about pre-trauma therapies. Okay. So the system is pushing for the insurance to accept this part. Because as of today, if you feel yourself bad about something, and if you want to take a precautionary thing, if you go to this insurance, they will not accept. Because you don't have any findings. You don't have any reason to get paid. But if you don't get paid today, after 3 to 5 years, you will have much bigger conclusions. So the world is going to that direction now. Same thing is happening around with technology, last mile delivery. So we are talking about transportation. So I am living in Istanbul. I'm telling you as a person. I cannot utilize a taxi, personally speaking. I have all the apps in the world, everything I have. But if I want to go from one place to another, my wife calls me, can you come and pick me? Because there is no car on the street. This is reality. So transportation. Mm-hmm. So with this change of our lifetimes and habits, I think we cannot forget that long distance working will be the winner for the next future. And people don't want to go to the office. And this great resignation, whatever you call this, people want to be free. And they want to be measured with their KPIs. I don't want to lay, I don't want to go and have coffee. No, I want to work, but I want to be flexible. Give my task, follow me up, and I will deliver this to you. Call it mobile offices, call it mobile, office management tools, whatever you call, this is going to be a big time winner.
Interesting topics you mentioned. Healthcare, yes, awesome. You talked about last mile delivery. You talked about the reality of working from home, remote working, right? Today, you see San Francisco, the guys are coming to office twice a week. The entire Manhattan is like, that whole area is like a deserted, right? That's the new world, right? Amazon stopped constructing their new headquarters in Virginia. That's nice to say. But interestingly, why have you not mentioned energy as an industry for the long term? Let's talk about renewable energy. You talk about hydrogen. You talk about this is the largest hydrogen hub being built in Saudi Arabia. The Masdar here talks about energy. So what are your views of energy here?
From my perspective, in our asset class, there are some spectrums of returns that we are seeing, and this spectrum is heavily adjusted. For example, I personally don't know, after all this inflation, what will be the base of the expected return, because 4 years ago it was -1. Mm-hmm. Now it's 7.5. So what is the hurdle that I need to beat to make my customer, which is my LP, happy? So it starts with the bottom line, infrastructure, real estate, private equity, venture capital, and it goes like this. So from that perspective, for us, energy, infrastructure, energy is falling under the infrastructure area. And for us, energy is a very capital-intensive industry. Yes, definitely, there are some small ticket capitals are there. But I can see that, this is a big ticket, modified return area. And for us, we are more like a player in the innovation, in more like high growth industries, in more like the innovation industries. From that perspective, for us, it's always there. By the way, as we speak, we are talking about some kind of a structure, infrastructure fund, but for a specific client, because at the end we need to understand our clients as well. So we need to cater their needs. But for the future of private equity and venture capital, we are mostly following more disruptive, more 3x, 4x plus industries, because we need to have the balance, We need to have some unicorn candidates, and we need to have some modified returns, and we need to have some classical hurdle bringers.
From the energy perspective, yes, the attention due to the COP26, the commitment to the climate accords plays a role. It's highly capital intensive, I agree. Smart players, especially government-driven, funded, would make sense. Yes, there are the battery players. We also have Lucid Motors, so it's funded by Saudi Arabia, intending to start manufacturing in Saudi Arabia, competing with Tesla. So there's a huge play there. I tend to agree with you that it's capital intensive. Correct. Now, let me talk a little about how can...
this part, you made a very good point. Exactly. We have a fund called Joint Emerging Market Managers and Direct Investment Program, JEDI, Venture Capital Program that we initiated. And we are investing in the Silicon Valley. Exactly as you said. Where are we investing? Portable batteries. Where are we investing? In a company which has an agreement with Uber for their millions of cars, saying that because what is the biggest problem now in this area? Charging. It took too long and it took some level. So we invested in a platform and we brought them to the GCC. We introduced them to the GCC investors. What are they doing? Is you park your car, when you're having your coffee, AI is coming in, take your battery out. In 5 minutes, you have a new battery and you can go for another 400, 500 kilometers. This is the areas that we are looking more. And coming back to the energy, I was in Abu Dhabi 2 months ago. Then people are talking about, and people are investing in carbon emission trading. So you will have your point, you can trade it for some funds, and you can get a fund in return. This is what we like. This is the new school of what we are investing, rather than going for the fundamentals,
I have a downstream question on ESG.
Yes.
I have my own view on ESG for a minute, but let's talk a little about, we talked about family offices, investors wanting to do investment in Turkey. Now let's talk about, if there's a fintech in this room who's got a great idea and he's experimenting with which country to, sort of set his base. I'm asked the same question I asked you before. See, I have read about the Turkey regulation. The banking systems are robust. They also have TÜBİTAK, which is giving some funds for venture capitalists. They also have Horizon 20 from the EU, etc. So, but still, the fintech and the promoters go for angel investing and VCs, right?
Yes.
So, what would you think from a government perspective? How can they do things better or more beneficial for companies to establish themselves in Turkey? I mean, I want your viewpoint on that.
Let me try to give a politically correct answer to this question. So the issue is always this. There is innovation, there is regulation. Sometimes, and it should be, innovation followed by regulation, because you cannot regulate an industry without an innovation. But in some places, in some industries, regulation is beating the innovation. So you are putting too much hurdles for the ecosystem that they cannot breathe, they cannot come out of it. Because let's not forget, these people are young people with a limited source of capital, mostly from their friends and families they are responsible for, and they have a span life of 1 to 1.5 years. And they have a great idea. And they shouldn't have to be a great idea. Moderate idea with a great execution. You don't need to be the genius next Steve Jobs, I think. You have moderate idea, but a very good executive team. But let's not forget, these guys are living with their out-of-pocket money. They're not billionaires. So from that perspective, yes, in the previous panel, the discussion was happening around fintech. I think in Turkey, in 2014-15, they established a great structure of promoting the venture capital ecosystem. There is no corporate tax. There are some benefits of investing in, and we see a boom of the ecosystem in the venture capital. But why isn't enough? Why is it not supportive enough? Why are we still looking for venture capital ecosystem? Because of one reason. Regulation is sometimes beyond the innovation. So now the effort is there to modify the regulation. Because we are talking about what happened to the ecosystem of the US banking system. In 2018, not 2008, they bring another innovation which brings a destruction, which is the bank that we are talking about, we are talking about Dodd-Frank Act, happened in 2018, which freed many restrictions below $250 billion of banks. 250 billion, not million, not thousand. So the conclusion is this, but this should happen. So there should be winners, there should be losers. But if you want to regulate everything to prevent a 0% of loss, this will never work. I think the GCC, especially Abu Dhabi, Dubai, I am seeing this pioneering of this user-friendly ecosystem is happening quite well. And that's why we are seeing this capital flowing. And Turkey should follow that, and following it, and should follow it more quickly, more proudly, to make it regulation more lightly, to make innovation happen actually.
And to give you some inputs on the central bank of the UAE, which is doing, so I've worked closely with them. So we are part of they're doing everything digital. National ID is very key. Number two, how do you smoothen the friction for KYC?
Yes.
You need a wet signature in today's world. That's also getting moved out today.
Don't tell me about KYC.
Here the countries, talking about the country here, just to give some lessons which I have seen in my experiences. One is giving national identity. The central bank has set up a chief fintech officer. Imagine a central bank starting a chief fintech officer position. So their remit is to ease the industry, the financial infrastructure here, bringing open banking, open finance, eKYC, all of that. So you're right. There's a lot to learn from this, from lessons learned here. I think there's a lot which both countries can benefit from. And I'm sure that we should. I know I'm not away from time, so probably we'll give a few questions to the audience. We're on time? Yeah,
Okay.
yeah. So we'll take some questions from the audience, ladies and
Walid,
gentlemen.
you are a moving place. That's why we couldn't catch you up, you know? Okay.
It was a great discussion, San. You talked a lot about how both fintechs as well as venture capitals can make some benefit from each other. You talked about the upcoming sectors like healthcare, last mile delivery, and the ability to work remotely. You talked about family offices, and looking how do we speak their language, and to follow the lessons learned in this part of the world to promote the ecosystem. So just to summarize our talk. So any questions, ladies and gentlemen? We'd love to. We have a great panelist here. Would love to engage with you on any question you'd like. Walid, La? Oh, thank you so much for your time.
Thank you,
again,
Salam, for this moderation. Thank you. I'm a pleasure.
Thank you, Hassan.
Thank you, guys. I don't want to keep you away from your lunch. So sorry for being a little bit late on schedule. So please join our lunch, and we'll continue the last two sessions after lunch directly. Thank you. Can I have a picture with Hello everyone again. Hopefully you enjoyed your lunch. So we're starting in 2 minutes. Kindly be seated. Let's try to catch up with the timing. Now I would like to introduce Dr. Mahmoud Aydogmuş. He will give a presentation overview of the Turkish capital market and Borsa Istanbul. Please.
No problem. Hello, ladies and gentlemen. Distinguished participants, esteemed guests, I'd like to greet you on behalf of myself and my institution, Borsa Istanbul. We talked in the morning about banking, and then later on there was a great session on private equity and venture capital investments. And I think it's very timely that we are talking about capital markets now. What I will do, I will not take too much of your time, but I'd like to go through a brief overview of the capital market structure in Turkey and a little bit of detail about Borsa Istanbul, just to give you an idea and overview of the underlying infrastructure for the capital markets. Before we start, I think what's critical is the strategic location of Istanbul, which is a 4-hour distance flight to a number of close to 50 different business centers, trade centers in the world. And this is a great strategic importance for Turkey and Istanbul as a financial center. When it comes to capital markets, in the previous sessions, some of the panelists also mentioned that our capital market in Turkey is still young, it's still growing. Our real sector is still predominantly financed by the banking sector. When you look at the banking assets to GDP, it's about 95%. But the market cap to GDP is about 40%, which in developed countries you see this more than 100%. From the top blue chip companies of top 1,000, we only have about 10% listed. So we are still constantly working on talking to the companies and inviting them to come and list at Borsa Istanbul, and our current management is working very hard on this. We are seeing very good progress. Last year and the year before, we have seen record number of IPOs. Actually, we are very high among the rankings in the world, but still, we have very much room for growth here. As many of you know, Turkish assets are currently very attractively priced. When you look at the price-to-earning ratios, we have about 6.5 PE ratio for the Turkish assets. In the comparing to the MSCI Emerging Index and MSCI World Index, you can see clearly that Turkish assets are attractive. So we just want to say to the international investors to consider, and we want to invite international investors to the Turkish capital market. Looking at the assets, we have about 390 billion US dollars in total market value of securities held. Most of this is in stocks, about 315 billion. And we have about 4 million investors in the stock market. We have seen record growth in here as well. In the last 3-4 years, this number almost tripled in terms of number of investors. So, and we have a number of other asset classes, including government debt securities, mutual funds, corporate bonds, and structured products in our market. Just to give you a little brief history, Borsa Istanbul and the capital market story in Turkey goes back to the Ottoman Empire times. In 1873, the first exchange called Dersaadet Bond Exchange was established. And then later on, Istanbul Stock Exchange was re-established in 1985 and still live today. But we went through a number of steps of transformation. And we have merged with Takas Istanbul, Merkezi Kayıt Istanbul, and we have merged with Istanbul Gold Exchange and the Izmir Derivatives Exchange. So we have become this one big, one-stop shop, providing capital market services end-to-end, from pre-trade, trade, and post-trade services all in one. So we are a group. We are called Borsa Istanbul Group. With the Takas for the settling and clearing and settlement side, and the Turkish CSD, Merkezi Kayıt Kuruluşu. And you can see that we are majority owner in both institutions as Borsa Istanbul. Our business model and value chain, we provide listing services for domestic and foreign IPOs and SPOs, and also debt securities for corporate bonds and SKUKs. Our majority shareholder is the Türkiye Wealth Fund, which has about 80%, and then we have a number of other investors as shareholders. We have basically 4 different markets: equity market, debt securities, derivatives market, and precious metals market. And we have investments in a number of other exchanges around the world. 4 different exchanges and a number of other investments in Turkey. We are very keen on following international best practices and international standards. We are a member of the World Federation of Exchanges, a board member, and other institutions also follow similar international standards. I'm not going to go to the details, not to take so much of your time here. I want to show you this one. This one is interesting. It shows the growth of individual investors from about 1.5 million, which was the same. This number was pretty much the same for over 20 years. And then in the last 3-4 years, we are now up to 4 million investors. And this mostly happened during the pandemic, and then continued afterwards for a number of reasons. Maybe one of the reasons becoming the macroeconomic conditions, and also a number of other factors. We are also constantly working on financial literacy, financial education, We are working with universities, trying to reach out to the young generation and help them, learn the investment behavior. I'll keep it brief here on the markets, but I want to give you some highlights. Our equity market is one of the most liquid markets in the world in terms of turnover velocity. And our single stock futures and precious metals futures market is number one in terms of number of contracts traded. And our debt securities market is number third in the world in terms of number of new listings for corporate bonds. So these are some of the highlights. Just to give you an idea about how big the market is, average traded value for the equity market is about 4.1 billion US dollars. This is per day. And market cap in 2022 is about 330 billion US dollars. And these are some of the products that we offer in our equity market. We also have a BIST private market. This is something that off exchange, but we want to, going back to the earlier panelist, this is a way of bringing together investors, venture capitalists, and the startups through the basically moderation of Borsa Istanbul. We offer a online platform, and through the trusted name of Borsa Istanbul, these two parties can come together. This is to encourage and support SME development and startup development, and hopefully these companies in the future will IPO and join us through our listing. We have about 61 companies in the MSCI index. 17 of them are large and mid-sized companies, and 44 in small cap indices. Our debt securities markets is about daily average is 2.9 billion US dollars. And these are some of the products that you can see, repo, reverse repo, etc. are some of the products offered there. Derivatives market is actually quite ambitious and growing. We have 1.9 billion daily traded value, and we offer our most popular products are single stock futures, currency futures, and we also offer options in our market. Precious metals is also an interesting market. You don't see this in a number of exchanges, but through the unique structure of Turkey, we were able to develop this market, and we went through a number of steps to make sure it's very much compliant to the international standards, the supply chain management, Kimberley process, and all of that. So it's a highly regarded market in the world in the area of precious metals trading. I want to talk about the technology that Borsa Istanbul has developed and acquired working with Nasdaq over the last years. From 2015 to 2018, we have worked with Nasdaq, acquired the Nasdaq technology, and over 3 years, gradually we implemented that in our market. And this was a landmark project for Nasdaq as well, one of the biggest projects for Nasdaq as well in the world, because we were able to transfer all our markets, not just one or two, but all markets. And after this, we went through a heavy customization and made a lot of required changes. We call this a BISTEC system. And this system features a lot of new innovative steps for the market, including low latency, uptime, multi-asset, multi-platform, a number of other features that made the platform very strong. And now, today, we are working on the next version of this infrastructure. We call it BISTEC 3.0. We are now making it more fast and more efficient. And we are working on developing our international technology services. We are providing now services in the field of testing, migration, integration, and business advisory internationally. This includes installation, integration, updates, data migration, know-how transfer, training, and IT consultancy. And we provide these kind of services to Turkey countries, Balkans and Middle East currently. We have plus 200 IT personnel. They include analysts, developers, testers, and system integrators. So this is our way of looking at the fintech. Maybe this is how it relates to it. We are very much keen on developing this technology and utilizing it internationally. Our market is very much reliable and investor-friendly. This is a message that I'd like to share with you. Anyone, any legal persons and legal entities residing abroad can make an investment in Turkish capital markets without any issue. We have very sophisticated information sharing platforms called public disclosure platform. We have robust actions in corporate governance and sustainability. We have our indices on sustainability and corporate governance in effect for a number of years now. And we do a lot of effort in this. We provide guidance for the companies, and we encourage the sector to build funds on these indices so that there can be more international investment in this area. Investor protection and safe trading is something that we are very keen on. There are a number of tools out there to make sure there is investor protection, including investor compensation center, real-time surveillance systems, Takas Bank CCP function, etc. I want to just stay a minute here for this slide, and then I will wrap up my presentation. As Borsa Istanbul, we are also working with OIC countries. These are 57 countries of the OIC region. And we work with their exchanges to basically come up with some partnership projects, partnership ideas. What can we do together to mutually benefit and develop? And we have so far come up with 3 different projects. One project has recently been realized. We have developed a fund, including 50 companies from 19 different countries of the OIC. And this was now offered. A fund was developed based on this index, which was calculated by S&P. This is now offered in Türkiye and internationally. So this is something that we have done to facilitate. And UAE is one of our also countries. UAE companies are also in this fund. Another thing is we are developing is something called BIGA. It's 1 gram gold, 1 gram altın. It's a blockchain technology commodity transfer mechanism. And it's developed by our settlement and clearing arm, Takas Bank. It allows transfer of gold from one country to the other country through this blockchain system. And this is something that we are working with our colleagues in other exchanges in the OIC to make it, if possible, an international collaboration project. And the other one is sustainability, which is we are working on constantly on this to increase everyone's effort on this. So these are all. I just wanted to give you a brief highlight of Borsa Istanbul and Turkish capital markets. Thank you for listening. If you have any questions, happy to answer. I guess not. Okay, thank you.
Thank you. Now we're moving to the second panel of the day, a new landscape for fintech in Turkey and Arab country. Please welcome with me Ms. Gözde Demircelin, Mr. Mahmoud Ali Youssef, Ms. Kokilla Alag, and Mr. Olivier Crespin.
Good afternoon, and welcome to the new landscape for fintech in Turkey and Arab countries panel. As the fintech industry continues to evolve at a rapid pace, given the current economic climate, there has never been a more critical time for innovation in fintech, in financial services. In light of this, today's discussion is essential for our audience, and we are privileged to be joined by some distinguished legal experts, startup leaders, and financial services experts. Today, we will talk about the current landscape for fintech, the challenges of navigating the regulatory environment, and potential opportunities and risks involved with operating in fintechs in our region. So we hope today's discussion will be both insightful and informative. Without further ado, let's dive into conversation. But before doing that, I would like our panel to introduce themselves. I'll start with myself first. My name is Gözde Demirçelen. As you know from the name, I'm Turkish. I'm a partner of Wings Capital. It's a VC focused in UAE, Turkey, and Saudi. I worked as a VC for my recent career in Dubai Future District Fund, in Dubai's government VC. Before that, I was in Abu Dhabi, in semi-government VC in Abu Dhabi, and before that, I was in 212 Capital. So we will dive into investments in fintech and what we went through. Kokila, please go ahead.
Hi, good afternoon, everyone. My name is Kokila. I'm founder of a law firm based out of UAE that works in the emerging tech sector. So mainly our clients are either established fintechs or aspiring to become one, and also working in the other technology sector like healthcare, medtech, insurtech, and virtual assets is one of our main frameworks that we work on. We're licensed to operate in UAE as well as in Bahrain, and I look forward to this very interesting panel, and especially to talk about what's the regulatory framework for these fintechs here in the region. Thank you.
Thank you. Oliver?
Hello, hi. My name is Olivier Crespin. So my name is not Turkish, it's French, right? You can understand. And the accent as well is quite French. So I'm right now working for, I'm a general partner in a VC called True Global Venture, where we invest in Web3 company across different kind of verticals. Some of them being financials, gaming, and so entertainment, and so on. But prior to that, I've been building banks. I have traditional career as a banker, launched bank in India, Indonesia, Vietnam, and more recently in UAE. And I'm particularly interested today to be in a panel to talk about the relationship between fintech and banks and how they can work together, right? Thank you.
Hi, everyone. Mohammed Ali Yusuf. I'm the CEO and co-founder of Fuse. Fuse is a digital assets as a service platform. We're looking to bring digital assets in a regulated and sovereign way. We've launched here in this market. We're also expanding to Turkey. So very good to be here and meet so many people. Previously, I was the regional manager of Checkout.com, the $11 billion fintech, and spent about 10 years in fintech working in Visa and as an advisor to many of the region's central banks. As some of my co-panelists said, very excited to talk about this. I really believe this is the time for fintech in the Middle East region.
Let's start off with Kokila. How do you stay current with updates and changes in regulatory environments such as this?
I think this is an environment where we don't sleep anymore. It's either the market that keeps you up, or it's the regulators announcing new regulations, new frameworks, trying to understand what's happening in this space. So I think this is the most challenging time that I have seen in my legal profession, because we're talking to not just aspiring fintechs, but even banks trying to understand that what essential changes they need to bring into their traditional systems to accommodate these fintechs. In fact, last week I was with the governor of one of the regional banks, central banks, and he said technology is eating up the banks. And I said, now that's a bold statement where, we say it's eating up the bank. It's more like we thought that, this is finally we're at a convergence where they're working together. So to keep an eye on these trends, it's very exciting. And fortunately for my law firm, we're in discussion with a lot of financial regulators, especially in this region. So we get to know of a lot of, I would say more of thought leadership coming from these banks. And especially working with a lot of startup fintechs, we keep an eye on what are the new market trends, what is it the market's looking at, and what is it that the international benchmarking, and especially now in the space of AML, KYC, we've done a lot of work on that space to understand what is the need of the hour right now.
Mm-hmm.
So these market trends, as I said, it's a good discussion we'll have once our formal questions are answered.
Perfect. And Oliver, you are a banker and a fintech innovator at the same time. So how does one innovate better with the partnering of the banks? Can you elaborate a bit on that relationship?
Yes, definitely. So, fintech and banks, they often need each other, right? Banks, because they cannot do everything themselves, and you have some fintech company who are really specializing in some product that they are mastering really, the customer experience and so on. So you really find a very good combination between the two. And I think that when you're in a fintech space, because it's about finance, right, trust is super important. So you see really a good partnership usually between fintech and bank. Particularly the fintech, we want to go into lending products because usually you're not allowed to lend money if you're not regulated. So they will need the license of a bank to be able to provide the services.
Mm-hmm.
So, but to make the partnership work, you really need to get, what I noticed works very well is that if in a bank, you have someone who is really a sponsor, a strong supporter of the fintech. Because I saw that so often, right? You have a fintech coming to a bank and presenting a product or a process that they have, and the technology in the bank is going to say, no, we can do the same. Faster and cheaper, but it never happened. So you really need to be able to help this company to navigate if you really believe they have a strong product that is going to make a difference. So that's what is really needed, right? Strong sponsorship in the bank for this to happen.
For sure. And I think, Mo, you can actually shed light on that from the fintech perspective. If you can elaborate a bit how fintechs and banks are collaborating, or if it is possible to collaborate.
Yeah, of course. Thank you. Look, so I think what's happened in the region is that at first, fintechs, came out and banks were very scared, and banks were looking to compete. And as the industry has matured and evolved, many of the fintechs that I talk to are now partnering with banks, either because they want to get a BIN sponsorship, or they want a current account, or they want to have a regulated partner. And what's happening on the bank side is that they've realized that many fintechs are not directly competing, but they're offering complementary products and services. So, for example, being able to do digital KYC onboarding, as you were saying, there's a lot of cool fintechs like that. A lot of innovation here around kind of wallets and payments that was previously not here, and banks are now looking to consume some of these partners and offer it to their wider base of customers. I think, as an example, one of the fintechs that I really like are focusing specifically on Generation Z. So those younger teenage customers, banks don't have the money or the time or even the appetite to go and attract some of these customers and offer them a purely digital game-based experience, but these fintechs can actually do that. And it becomes a nice partnership because then these customers then mature and they eventually become customers of the larger bank.
We have actually invested in a company that focuses only on youth credit cards. And I think there are 4 competitors within the UAE only just in this space. So I can definitely understand how fintechs are the innovative arm of the banks at this point.
Yeah.
When you look at that. I have a lot of questions for you because, you know, in an environment of, I don't want to name any names, but in an environment of every week we have a different news on something going on and off or a new regulation being released. How do you see the balancing of innovation and compliance in an evolving digital banking landscape?
I think the answer for this will be to talk about all fintechs and then talk about the virtual assets one separately. So for all other fintechs, we see, as you know, as the other panelists have also mentioned, that now banks are more welcoming. The regulatory frameworks are a lot more robust. There's a lot of acceptance by the central banks or the reserve banks who are coming out with these regulations. And also the new fintechs are more user-friendly, and the traditional banks are, it's better for and easier for them to work with them. But the challenge comes when we talk about the virtual asset space, which again is a big discussion going on, and especially in the global scenario in the last 2 weeks as we're seeing what's happening with this whole space. The regulations, especially in this region, are, I think this region is pretty much leading the whole global space in virtual assets by example. Where we came out with the regulations way back in 2018 from ADGM for virtual assets, followed by Central Bank of Bahrain. Then we saw what DMCC did with crypto oasis. Then ESCA came out. Then VARA, a bespoke regulator, has been set up for it, which is, I think, which is just a path-breaking event that has happened, and especially for UAE to set an example for the rest of the world. But in all my honesty, working in this space, I would say it's still a long uphill battle that all these virtual assets companies have to go through, mainly because the regulators who are working with them, the users that they have, the investors that they all have a very different mindset. So the risks that are involved in it are quite big, like any other financial product. Some of the regulators have decided to be technology agnostic and say we don't look at it, and then we have huge frauds which are there on the side. So is that something a regulator should be looking at, or is that an enforcement body that needs to look at, or is that an industry we need to clear out and have more serious players in it and let go of all these frauds that are happening? It's still a long way to go. So in the regulatory space, every regulator now we're trying to see globally is trying to come up with frameworks or policies or some sort of enforcement, and which is a welcoming, I think, a big welcome and a change for the whole virtual asset industry. In some of the jurisdictions, even if I give you an example of India, where initially we banned virtual assets, then we removed the ban, then there was taxation that was announced, and then last week onwards, we've announced that we're going to follow what FATF requirements are, and all AML KYC will be done for everybody in this space. So we do see that regulators are trying to now get into this whole space, because for a very long time they've stayed away and say, oh, no regulation, and let these virtual assets just grow on its own. So it's quite an interesting juncture, that whole virtual asset space is, but quite promising as well.
Perfect. And Oliver, we are, I guess, to a similar question, how to innovate while complying with regulations in this current market? What would you say about that?
That can be a challenge, right, to innovate, because the cost of regulation is very important. But at the same time, that's also an opportunity, I would say, because it's quite complex, so the barrier of entry is big. So if it was easy, everybody will do it. So if you go and specialize on something and be able to crack it, I think you can have a big return on it as well, right? So there are a lot of areas, and I think obviously regulation is needed, because we see that the example where everybody tried to self-regulate themselves doesn't really work, right? After a while, you know what happened recently with FTX and so on, right? So it doesn't really work. So you really need, in finance, you need someone kind of external to guide everybody to make sure we protect the client and we protect the market and we we make sure we always understand the risk very well. So I think to get to align with the regulation, I think everybody agree on the big picture. We all want to do the right things. And when we go and talk to the regulator, we need really to show that we understand what we are doing. So if you go and see the regulator and you say, I'm going to do digital onboarding, the regulator is going to tell you no. But if you go and say, this is the way I'm going to do onboarding, it's going to be done this way, and you describe a digital onboarding, and you tell the regulator, this is the risk I've identified, this is how I mitigate it, and this is the residual risk we can agree to take, then you have a high chance, right, to get your new way of doing things approved. But that requires a lot of time, a lot of education, a lot of conversation, engaging the regulator very early at the beginning. And then if you crack the issue, I think the reward for the fintech can be huge, because everybody is looking for this kind of solutions.
For sure.
Olivier said something super important that I think it's important for people in the room to actually know. This is one of the few regions where you can go and you can meet with a regulator. You can go into their offices, you can have an open dialogue with them, explain your business models, explain what it is that you want to do. If you're in the US or UK, you don't get that access. And here you can go sit with Central Bank or VARA or DIFC or SAMA in Saudi Arabia. You can go and have those dialogues. And I think that's really shows the type of culture and industry that they want to build, where they want to build right, they want to build fast, but they want to do it together. There's a big community push behind a lot of fintechs that we see coming up today.
Perfect. And coming back to you, what would you, how would you see the future of fintech ecosystem, or how would you see it evolving? And if you can actually a bit talk about your experience, that would be great, because I know you are thinking of going into Turkey, and your experience in the region through checkout was immense as well.
Sure.
So if you can talk a bit about that, that would be great.
Yep. So I was previously at checkout.com. It's one of the largest payments companies. We obtained 4 regulatory licenses across Middle East in 2 years. And I think once you understand the playbook and you understand what regulators want, it's a long process, but it's not terribly hard. They all really look for the right governance and the right compliance, and essentially, protecting customers is what they want to see. And as we saw the sandbox in Saudi come up, we saw new regulations in Bahrain and here in this market. In fact, in the UAE, there are many different regulators depending on the type of business. It is, they've constructed the frameworks such as they're very open to business, right? So if you have a fintech, if you want to launch a new business in this part of the world, they make it open enough that if you bring in the right tools and the right capabilities, you can be a regulated fintech. And also, I think one thing to really note is that when I was in Turkey, we had the chance of meeting Kolendi and Pabara, and the Turkish market is so advanced when it comes to fintech, and I think that this region is now just kind of reaching that tipping point. We've just received, I think, a comprehensive set of frameworks which only came out in 2019 or 2020 maybe. And so which are really starting to accelerate the growth and the expansion of fintechs. But there's still a lot to do. If you look at some of the fintechs in the US, like Stripe or Plaid, for example, right? These big multi-billion-dollar fintechs that have been operating and grown because the US released regulations back around 2010, 2011. This region is still very young because the regulations have just come in. When it comes to virtual assets, I think we already have the expert here with us on the panel. But one thing that the UAE has done well is that they've realized that you need to have regulations to really drive growth in the fintech space. And so they've taken the leap and they've launched really comprehensive digital asset, virtual asset regulations so that people can innovate, that the ecosystem can be supportive, and we can build unicorns and decacorns that are coming out of this part of the world. So I think it's still very early, but I think the right foundations are now in place.
Yeah, I think I really agree with Mo. The opportunity is there now, right? And the foundation is here, right? Yeah. You have a regulator as well on virtual assets. Now the opportunity is to bridge traditional finance and decentralized finance, because I think that decentralized finance, while excellent because the platform, the technology is great, but what is lacking is sometimes the trust as well as the simplicity of operating, right? So for example, I always take an example. If you want to buy a commodity token, you need to go and buy it, move it into MetaMask, then go migrate it from Ethereum to Polygon, do your KYC on Tokeny, and do a trading on a big one platform, which is super complex. Not many clients or private bank clients are going to go through that. So I think if you kind of simplify this decentralized finance, because I say traditional finance is already decentralized finance, because when you buy any kind of securities, you go through a broker, you have a custodian, you have a clearing agent, but it's all wrapped, right? So you have someone who is kind of bringing everything together. And I think there are a lot of opportunity here, bringing some kind of the trust into decentralized finance plus simplifying it. So a lot of companies may have opportunities there.
Perfect. I mean, thinking about, so I have been a Turkish person living in the UAE, so this is a very Arab panel. And when you actually compare the two ecosystems, it's quite different in many ways. So this September, I had to, normally with the acquisition of Denizbank in Turkey, of Emirates MBD, things have been a lot easier for transferring money and receiving in your own currency. So it has been a great enabler for us, and there has been a lot of people moving from Turkey to the banking system here through Emirates MBD, so that we have seen that wave. But when I was in a situation where I wanted to take my dirhams out of the account rapidly within hours into my Turkish account, there was no way of doing it. So it was my first time thinking of crypto as a solution, and within a few minutes, I actually got it in my account in Turkey, and this was just like amazing magic. So, I think even in this panel, as we are talking about regulation and fintech, we are already talking about Web3 mainly as a future of fintech as well. So, how do you see fintechs collaborating with Web3 for evolving into that space, whereas we were actually kind of scared, and many VCs don't even invest in the traditional VCs. They don't even invest in the crypto space, thinking this is too much of a black box. But now we are actually just changing the opposite direction, where we cannot talk about fintech without crypto.
Absolutely.
Or Web3, to be more
I think one of the
precise.
first step that we all should do is that we should just stop calling it crypto, and we should move towards using the terminology of virtual assets or digital assets, which gives more comfort to regulators, to the traditional bank, and to the industry at large. Because when we talk about crypto, so just an anecdote, like I did cryptography law way back in 2003, that was my master's. And I had a difficult time explaining it to anybody and everybody I spoke with, and like, who does that? And I'm like, oh, that's another area we dwell into, but I haven't seen much change into it. If these were not called currencies, life would be a lot simpler and easier for this aspect. And the acceptance would come easy, because when you say currency, I immediately start looking at it. Somebody has to mint it. It has to go back to, it has to be a legal tender. It has to be with a central bank. It has to have a government backing. For all legal purposes, practical purposes, it's difficult to think about doing it in such a decentralized manner and in a swifter way, like within milliseconds, value gets transferred. Let's not even call it money. Value gets transferred from one to another. No need of a third party to sit there and say, trust him or trust her, but the trust is there on the system. So that whole trustless system. So these are new mindsets we talk about, and I'm a firm believer in it that the next generation which is coming, it will be a lot easier for them to understand. They're born in this space. So this whole Web3 space, which again is a very interesting concept that we've been working in, and as a firm working in this space, we're looking at these financial services in the Web3 space even from a metaverse. Not that I'm a big fan of that terminology again, but it is what it is, where we try to understand that where all it has impacted us. When we're talking about games now, these games are no longer games of 6, 7-year-old kids playing. These kids are exposed to financial products. They're buying those skins, they're using the tokens are getting listed, they're making money. So we are seeing fintech and Web3 like pretty much as essential as breathing is for all of us. And that to be explained to the governments and regulators, saying that when you're looking at these parameters to regulate it, please do not limit yourself to just investor protection, consumer protection, data. We're talking about security, we're talking about cyber security, we're talking about digital ID, we're talking about a socio-economic cultural shift. So it's a larger spectrum, and where I think the most essential step that all regulators need to do is that this is one time when all of them have to work together. It can no longer be just fintech, Web3, we are in this mesh now.
Yeah,
so
exactly.
It needs to be looked from regulations and governance coming for protecting my 80-year-old child to my 80-year-old grandmother, who are all using this and are in this Web3 space. So that's why I say it's quite an interesting time space to be in for us.
Perfect. I know you are nodding enthusiastically, so I'm actually going to also pass you the microphone. But before saying that, I want to remind the audience, Turkey is one of the top, actually the third biggest crypto market in the world, and it's not regulated. So, and this is such an interesting fact, and I am really, I think I'm going to witness something from being created from scratch to however it's going to evolve, because we will see how it will be after regulation. So with that, what is your thought on Web3 and regulation and how the fintechs are going to adapt it?
So Web3 is definitely the future, right? You can see that every day, right? So the big advantage, and as mentioned previously, obviously, is customer experience, because it's much faster. You can transfer your assets instantly. Also, and by the way, this morning I saw that Binance or CZ transfer.
Fix your microphone.
Sorry?
Put it a bit closer to your mouth.
Yeah?
There you go.
Much better.
You can hear better?
Yeah.
Yes.
Okay, good. You see that Binance is, this morning, they transferred $980 million before ever any bank opened in the US, and it cost them $1 or 180, something like that, and it was instant, 980. Try to do it with any other bank. Also, from a compliance point of view, all the big advantage is that you have traceability. So it's much better, in fact, than what happened in a real world, where it's very difficult to really follow the money. Here with Web3, all this is possible. As well, you have all the smart contracts that allow you to build rules and to, for example, it's very useful for trade financing or delivery versus payment, where you can ensure it's really instant, right, when some rules are met. Also, you have the possibility to fractionalize, right, your assets, so you can tokenize private assets very easily and make them much more liquid. And I think all these are fantastic news, I think, for the fintech world and for the transformation of finance, which should be much better. I always say If you just take the DeFi tools and you implement them in a traditional bank, you will have a fantastic solution already. And also another point I would like to mention is generative AI, right, that is coming. Is also very, very important because it's going to accelerate the possibility of what we can do.
Of course.
And you can see that applicable in finance as well very quickly to recommend product and so on. So a lot of opportunities are already there right now, and I think people can go and embrace them very quickly.
Perfect. And Mo, you have been in this market for a long time, and you have seen the fintechs evolving. How do you see, and now you are actually working in a very Web3 space. Why did you make this change, and how do you see that for the rest of the MENA world to be in fintech from now on?
Yeah, so I think in the end, the end consumer doesn't care if it's Web 2 or Web 3. All they want is they want any transaction or any financial service they do to be secure, easy, and cheap, right? So if they're sending money via cryptocurrency or via tokens or via SWIFT, traditional banking rails, customers don't care. They just want it to work. What I really like about the Web3 space and the virtual asset or the digital asset space, I'm not going to say crypto anymore. I'm trying not to. But what I really like about the space is that the transfer of value and the transfer of data is so easy and so efficient. Mm-hmm. And as you were saying, you don't always have to have a trusted centralized parties. There's a lot of innovation when it comes to being anonymous and yet having levels of KYC. And I think there's a lot of cool applications that are going to be coming out. What's really different is that the regulations still are not there for many of these companies that are launching in the digital asset space, but this is now coming. And when I say regulations, it's not just about making sure that these startups have enough capital. It's like, how is it that you're doing KYC? How is it that you are validating the sender and the receiver? And a lot of this maturity is now coming into the virtual asset space. And I think once there's regulation, this will support the drive forward. So I spent quite a bit of time in Turkey the last couple of months. As you were saying, Turkey is the third largest market when it comes to cryptocurrency trading, and you have some 15 million crypto wallets. So huge market, tons of volume. And while 1/3 of the crypto investors are Turkey are investing only to hedge against the currency, the other 2/3 are actually investing to invest because they believe in the space, they believe in the future opportunity, the future potential of some of these tokens. So I think there's a lot of interest there, and similarly, the interest in this market is going also. And this will be a very big space going forward.
So how would you compare that to the Arab world? Do you think, because most of the conversations about crypto in Turkey is usually people assume it's based on currency, and it is not. But how do you see, we don't have that high volumes of crypto trading in the UAE, although most of the crypto individuals live in the UAE, so there's an interesting gap there. But how do you see that within the Arab world and how they trade here?
Yeah, so I think in Turkey the difference is that banks are increasingly open to cryptocurrency. So we met the 5 largest banks, and everybody wants to launch crypto-backed products to their customers. In this region, if you want to on-ramp or off-ramp, meaning I want to take fiat and I want to buy Bitcoin, or the other way around, the majority of transactions still happen through going to meet a guy, giving him cash, and he gives you back cryptocurrency. And so that's what I was saying, that once you have regulation and you have a very seamless flow, because there still has to be that bridge between traditional finance and new finance, and that is still missing here, versus in Turkey that's much more easy to move fiat in and out, and here it's just not here yet. So I think once that comes, you'll see a lot more adoption, a lot more volume. You'll see a lot more startups in the space once you get that bridge going.
Yeah, in fact, why we see a lot of company getting a VARA license, it's still very difficult for them to open bank accounts. It's extremely difficult. So it looks like there is between the regulators and Central Bank of UAE and VARA, there is not really a connection yet at this level, because when you have a VARA license and you don't have a bank account, what can you do? Nothing much, right? So that's really needed, and we see more and more progress, but it's pretty slow. And in fact, each time something happens, like what happened again this weekend, it may delay.
Yeah.
And give more opportunity to rethink everything again. So that's it will be there, it will happen, but it takes time, right? And again, find a solution at least to get the regulated VARA company to be able to do on-ramp, off-ramp, etc. is minimum, right, to be able to give them. So hopefully it happens soon.
Go ahead.
It's been a challenge for all these virtual asset companies, not just from the time of VARA, from even ADGM license. I think the first FSP was in 2020, and the company had to wait for 2 years for one of the commercial banks to actually allow them to, to start onboarding clients then, and unfortunately that did not happen. But surprisingly, when you talk to the central bank, the position they're holding is that we haven't stopped anybody. It's more on the commercial banks to start taking that risk and have that readiness to start dealing with virtual asset companies. And that has been a very peculiar position for UAE as such. I think there, Bahrain has done much better because it's coming directly from Central Bank of Bahrain. And the exchanges which have gone live from there have got full bank support. So once we have that banking taken care of, you will see a lot of trading volumes going up. Right now, it's the holders are sitting here. They're all holding on, or they're trading on platforms outside UAE.
And how do you think the latest Silicon Valley Bank episode is going to change things? Because I want to take the conversation more to Arab-Turkey corridor, and my wish as a cohabitant in both regions would be creating better corridors, especially in fintech, between the UAE, Saudi, and Turkey, where the licenses can be cross-border, the bank accounts can be easier, and this region actually, as a combination of the three countries, does not need a Western bank to actually open a bank account. Between the three countries, we can actually agree on a better system where you don't have to have offshore companies creating only accounts in the US or UK. So how do you see that to be solved? I think it was a nice alarm for everybody in the region to think about an alternative. And we have a lot of neobanks coming up in the region as well that makes account opening a bit easier. And hopefully the regulators will be enabling bank accounts to be easily opened here, even if you are not in these jurisdictions. But how do you see that? What do you think will basically enable that within cross-border?
What's happened over the weekend with these three large players has a deep impact on most of the startups from here, and especially the ones in the virtual asset space, because I'm myself aware of many of our clients exposed to these banks, because none of the commercial banks were opening their bank accounts here.
Yeah.
So they all were either dependent on these banks from there, or they had bank accounts, or they had the facilities from there, so the impact is going to be huge. I don't want to say much about it because I know the next panel you should hear the banker who's sitting here and going to talk about what he's doing it differently. But I think this is a time where when we talk about regulations, it's incomplete to just come out with a regulation and give a framework. You need to look at the whole enforcement side of it as well. So when we now want to blame, should we blame the Fed for it? Should we blame the other licensing authorities for it? Or should we blame the individuals who were running it? This whole thing has to stop, and then especially in this whole virtual asset space or this fintech or the startup space, where anyways these companies are very vulnerable. This is a new segment, a new product, newer generation working in this space. And when episodes like this happen, they go actually 10 steps back. Because now, when we know this for sure, one of the commercial banks that we've been advising here on the virtual asset space has actually called us this morning and saying we need to sit down and revisit the entire plan again. We need to understand, though we had been advising them on the whole custodian bit and understanding the leveraging that happens, but now we know that from their board, they're going to get a lot of resistance again. And this is the time when we're hoping that Central Bank of UAE will also step in. And though they say they haven't stopped the growth of virtual assets, they haven't even gone out and done anything for promoting and safeguarding this industry. So we're now actually waiting that a tougher position and a stand will be taken from the legal, not just from the regulatory, but more from the legal side as well.
And Mo, for the audience from Turkey in the crowd, you have raised about 14 million in a seed round recently. Can you shed a bit light on your experience in the VCs in the MENA region and how that funding was about? And as general talk about the VCs, I usually try not to talk since I am a VC myself, but it will be better to hear it from a startup founder.
Yeah, sure. So at Fuse, we've raised $14 million from a sovereign wealth fund and from a US-based VC, which we'll be announcing more publicly in the next couple of weeks. It's been a very interesting process. So I myself also invest in startups, and the kind of common feedback is that many of the VCs here are quite young in their journey. So there is a lot of capital, there is a lot of money here, but there's really a lack of smart money, excluding the two VCs that we have here on the panel with us. A lot of times people are ready to write checks, and VCs don't understand product, they don't understand licensing requirements, and so the kind of key message that I give to a lot of startups that I work with is really to find the right partners. VCs have to be your partners in this journey. They have to bring you the right network, the right expertise, and also they have to be with you for the next 5 to 7 to 10 years. One of the challenges here in this region is that, for example, real estate is such a hot sector. Family offices and some of the more younger VCs may say, hey, it's better for me to go invest in property than actually invest in a startup or support entrepreneurs. So I think that part of the region still has to evolve that mentality that there is a longer term gain, but they have to be in it with not just capital, but with blood, sweat, and tears with some of these founders.
Perfect, thank you. And Oliver?
Yeah, we think the same, because I guess it's not a question of if this is going to happen, right, to have this solution going to life, but when, really. So if you're able to come at the right time, probably now is probably the right time, right, don't turn a little bit. So it's where you will have an opportunity really to make a difference later on as well, and maximize your investment. There are definitely need of challengers bank, right, who are going to explore this new frontier. And I think as well the regulators will be as well, for them it's also better to get challenger bank to start this, because first of all they are more advanced from a technology point of view, and it does a nice split between traditional, a little bit more innovative things. So you can create some kind of sandbox, right? Plus, where all this innovation can start emerging, and everybody is learning at the same time, right? Regulators, challenger bank, and then the more established bank. It will come back to them as well.
Anything else to add? Great. So thank you for the panel. This has been great fun for me. I hope the audience feels the same. So we are closing this panel with the idea of banks and fintechs should be partners, and there's inevitable innovation there, and the regulators and innovators should be balanced. So it shouldn't be, regulators should be enablers, so the innovators don't suffer so much. And the fintech cannot be considered without Web3, and the future is a combination of all things combined so that the people can have a better financial service in general. Thank you so much for the panel. Thank you.
Lilian. Thank you, ladies and gentlemen. So we're moving to the last panel of the day, how DeFi and tokenization are shaping the future. The panel will be moderated by the one and only Sakara Raikat, co-founder and managing partner of Crypto Oasis. Please welcome with me Mr. Kristan Borrell, Senior Executive Officer, Branch Manager of Seba Bank, ADGM, Ms. Mehtab Onder, Managing Director of GCX Dubai, Jelson Da Costa, Co-founder and CEO of VAF Compliance. She's here.
Ah, there you are. Wonderful. It's the last panel of the day. It's one of the most exciting panels of the day. I'm really happy that you are still here. We're going to make this exciting for you. We just had the 16th largest bank in the world, unfortunately needing to be bailed out. So I'm absolutely blessed and honored that we're here with you today with such a fantastic panel that's all getting mic'd up right now. How many of you have followed the events of the weekend? Really? I thought the entire room would have gone up. So what we've seen over the weekend, please find your seats. What we've seen over the weekend is nothing less than mind-boggling. Bank number 16 in the US, one of the largest markets in the world, if not the largest financial services market in the world, has had the need to be bailed out this morning by the Federal Reserve, right? With that, there's no better time than to actually assess that whatever we were doing before isn't working anymore. And what we have over here is senior leaders in this space here to share their point of view if they ever get mic'd up and find their way to the stage. Next time we're going to do this 5 minutes before, gentlemen and lady, right? Okay, good. Give us a round of applause here one more time. And you know, given that Mehtab not only represents the crypto community here, but also the Turkish community here, give her a warm Turkish and Arab welcome.
Sitting here in the middle.
All righty. Super blessed and happy to be sharing the stage with you today. I would have tried and move a little bit. I'll move myself a little bit to you. Right. Nothing would have been better in preparation for this panel than what happened over the weekend. And what we've seen over the weekend is really the world as we know it from a financial services point of view not being able to function. In the most succinct way, maybe a less than 20-second introduction, starting with the lady on the panel.
With the lady on the panel.
Yes.
Yeah, that's me.
Always ladies first.
Thank you. Well, hi everyone. So first of all, thank you so much for having me here today. And secondly, my condolences to the victims of the earthquake in Türkiye. So yes, I'm Mehtab Önder. As you can tell from my name, I am originally Turkish, but born and raised in Denmark and been living here in Dubai for the past 5 years. I'm the managing director of GC Exchange in Dubai, and we are a broker for trading in virtual assets. I'm not going to call it cryptocurrencies, because I've been told that, but in virtual assets. And we are regulated in the UK, we are regulated in Europe, in Denmark, and here in Dubai by VARA.
Wonderful. Thank you very much,
Thank you.
Mahtab. Over to you.
Hi, my name is Christian. I'm the Senior Executive Officer of SEBA Bank. We are one of 2 regulated banks who received in 2019 from FINMA the banking license, and we are also operating out of Abu Dhabi, Hong Kong, and Singapore.
Wonderful. Last but very not the least.
Nice to meet you, everyone. My name is Gilson. I'm the CEO and co-founder of AF Compliance. My background is investment banking. I was an investment banker for JP Morgan in Europe, in the US. I moved to the region about 3 years ago. I was one of the founding members on one of the first regulated exchanges in ADGM in Abu Dhabi. And from there on, I saw an opportunity to create VAF Compliance. We are based out of the IFC, and it's a pleasure to be here.
Wonderful, and it's a pleasure to share the stage with you. And dear audience, we didn't promise you too much. Real experts in the space, people that set this up for the very first time. Now, we're talking about DeFi today. Just by a show of hands, who knows what DeFi is? All right, okay, so the majority of the room hasn't put their hands up. A quick introduction, what is DeFi and why is it relevant?
Oh, no.
Okay, decentralized finance, I guess. So as simple as I can put it. We use it every day. I think DeFi really has kind of changed the way we see the world, especially when it comes to traditional banking. You know, in the new economy, as an example, I think 1.7 billion in the world are unbanked. This is where DeFi comes in. 1.1 billion people in the world have access to a mobile phone. So people today, they don't experience banking as probably I experienced, traditional going to the branches and so on. They experience in some sort of mobile application. And that's really how DeFi has come and is, let's call it, an unstoppable force.
Wonderful. And with that, we've seen an entire new world of financial services being opened up. Elements that were previously closed off to accredited investors and large financial services institutions today are available to the public. 2021 was a little bit of a joyride upwards in the crypto world. 2022, a little bit of a reckoning. 2023, definitely a reckoning. We've seen a lot go right, we've seen a lot go wrong. Where are the opportunities in DeFi? Mahtab.
There was actually a lot of opportunities, if you ask me. But before we go into the opportunities, I think it's very important to discuss regulation. I mean, we need to understand that this is a market that is moving away from being not mature to becoming a mature market, hopefully very soon. Yes, it doesn't really help with what's happening lately, but and I think it's very important to understand that it's, as I said before, it's a new market and we need regulation. We cannot move into this market without the governments taking responsibility to actually implement regulation. We need regulation for investor protection. We need regulation for companies such as SEBA, such as GCX, and you guys to be able to operate, to be able to provide our services. So that is one of the things. Regulation is absolutely key, and we need, you know, strong governments and leaders to establish this. And I think, before I say further, I think UAE has been a great example of that. Other opportunities is, hey, I mean, we are talking about the Turkish-Arab Forum here, right? I think Turkey is a good example to say that, you know, I need to be careful what I say here,
Yes,
but with
do be careful.
but you know, with the inflation rate, with the capital control in Turkey, I think DeFi is one of the best examples where you can actually see opportunity, especially, you know, for the retail clients or for investors in general, right? So it's a new industry. There is a lot of opportunities, especially in countries like Turkey.
I want to challenge what you said a little bit.
Mm-hmm.
There's a wide call for regulation, right? And you're right. It's a new emerging industry. People don't know what to do with it just yet. But here we are just after this weekend, where, you know, a traditional industry that's been regulated for close to 100 years, and we still saw the demise of one of the leading institutions. Will regulations really enable us to establish this opportunity for everyone?
So I think we need to look at it at this point. One thing is having a regulator that's supervising you, and another thing is to actually have a governance, you know, infrastructure internally in your company, and to have the respect for rules and regulation that has been implemented, right? I mean, one thing is to be licensed, and another thing is to actually understand what it means to be licensed and comply by the rules. There's two different things here. You can tick all the boxes, but if you don't follow and if you don't understand it, then what happens, and I with all due respect with SVB, I don't want to comment on what happened. As Kokila said before, it could be, you know, an issue with the regulators, it could be an internal thing, and it could be lack of, you know, understanding of risk. I think it's very important to have a huge respect for risk, just in general. This is also why we saw the crash with FTX. You know, they obviously didn't understand what risks means. And what it means to actually comply by the rules and regulations. Right. But I think SVB, again, it's you know, what does it actually mean? And with Fed constantly increasing the interest rates without giving, you know, the companies, you know, a room for breathe, right? They're not allowed to breathe before the next interest rate goes up, right? I mean, I have my dear colleague here from the banking industry as well. I mean, I'm sure he can comment more on it. But I think it's overall, you know, yes, rules and regulations are important, but you need to understand as a company what it means and how you implement it and have respect for those rules, as well as for risk in general. Right.
I would like to complement that to that. I think totally right. I think the digital space industry, it's always held to a higher standard than the traditional TradFi industry, right? But you still had Enron, you still had Wirecard, you still had Lehman's. Right. But for some reason, if it happens in our space, then okay, everything has to fall down. We have to take 20 steps back, right? But at the end of the day, regulation is good. It will bring transparency and it will instill confidence in the public. But at the end of the day, it will come down to people. And you have bad players everywhere. So to your point, there has to be always an element of self-regulation. And again, I think the EU is doing the right thing, putting the regulation, but that by itself will definitely not solve everything.
I'm with you. And I've slowly but surely come to the conclusion that as much as regulation is desperately required and needed, we are at a point where technology innovation is happening at a pace where regulation and the form of governance that we're used to is simply not ready to deal with the fast pace of the regulation. Having said that, Zeba Bank, you were one of the first native crypto banks probably in the world, right? To get a full banking license out of FINMA. Tell us a little bit about that journey.
Well, unfortunately, I was not part of it, but what I can share that it was a hell of a ride to get that license from FINMA. Obviously, for FINMA governance, the people behind it and the investors were key. They had to be DD'd thoroughly. But also, what I would add to the DeFi part, and it's important that also we as a bank, we were struggling to get the approval from FINMA for the first permission DeFi on Aave Arc. Right. We actually got voted as one of the first validator, or the first institutional validator on that platform. Right. But FINMA said no. And there's still an educational part missing. So we still need to be out there. We need to educate as well the regulators. That's what we are doing on a frequent basis. Is it in Abu Dhabi? Is it in Switzerland? Or is it in Asia? And on top of that, as you guys said, the risk is here. The risk is all the time here as well with the banks, with DeFi. But at the end, it's what Chilson said nicely, it's the people.
Right. Yeah. So we've identified people as being one risk.
Yeah.
I want to play this back to you, Mahtab.
Sorry. Just to come back on the opportunities again in DeFi, right? I mean, we're seeing what happened over the weekend. I think people in general lost a little bit trust in the traditional finance, but just a lot, right? And now moving away. I mean, you have seen the prices of Bitcoin lately going up. Well, because people are moving away from the dollar and investing in Bitcoin, right? So, I mean, I'm not saying we should see more of these crashes, hopefully not, but it just gives, more opportunities to DeFi, for sure.
Right. Obviously, with the financial institutions as we know them not being able to keep up with these crashes, we'll see more and more interest in alternative investments, and crypto being one of them. How does crypto and DeFi relate to each other? Do you have to have crypto to have DeFi? Do you have to have DeFi to crypto? Who can explain that to the audience in the most simple terms?
Thanks. I would say no. DeFi, sorry? Sorry.
No.
No, right. So I would say that you don't necessarily have to have crypto or digital assets in DeFi, right? Obviously, we specifically talking about digital space, but like I said, like traditional banking. That's DeFi. That's about the banks actually, updating some of the services, like talk about more traditional stuff like savings accounts and those kind of things. Like, all these things can be replaced by smart contracts. Someone mentioned that in the group before. I used to do collateral management at JP Morgan. So that's derivatives. And that contract, you have a contract, you have a person, you have a clearing house. Smart contract can solve all that, make it more transparent, make it more efficient. Tokenization, everybody's talking about that. You can tokenize physical assets, financial products, and again, make it more efficient, make it more clear. It really, on the new economy, bring it to everyone, make it more simpler. So no, is the answer I would say. DeFi doesn't start or stop with digital assets.
Right. So you could do DeFi without digital assets, Mahtab?
If we talk about digital assets in general, not necessarily crypto assets, but digital assets, then the answer is no. You couldn't do it without it in some shape or form.
Right.
Yes.
All right. Wonderful. Mahtab, where do you find one of the largest short-term opportunities within the DeFi space, and maybe even bringing this closer to this Turkish-Arab forum we're in?
That's a good question. I mean, coming back to Turkish-Arab forum and the DeFi space, I think Turkey needs to move fast now. Turkey has a special place in my heart, although I lived abroad my whole life. But I've seen Turkey. So I've been working in Turkey for many, many years in my previous job, and I used to see Turkey as a fast mover, especially in the financial industry. And I think lately, especially in the DeFi industry, that Turkey has taken a step back, which is, in my view, disappointing to see. And one of the reasons being is that I know for sure, I've seen it myself firsthand, that the talent pool in Turkey is extremely high. You have very, very good talented people sitting there, and very educated people sitting there, and that wants to take a part of the DeFi industry and to move it forward. But it seems like there is an obstacle from the top. And unfortunately, that gives regions like the GCC, like the UAE, Bahrain, an opportunity to be the first runners, the first movers in this industry. And that means that companies just like myself, well, hey, we are, we operate, well, we want to be a part of the DeFi and we operate in that industry. Where do we want to set up? Where do we want to invest our money? Well, we want to do it in a place that are first movers, that actually want to be a part of this. And where we find that there is, again, strong government, strong regulation, stability, no capital restrictions, right? So that's where we want to set up. And I think talking about the whole Turkish-Arab, I feel like Turkey has taken a step back. I've been visiting Turkey lately, a couple of times actually, and although, hey, Turkey had they actually drafted the rules around virtual assets long before anyone did here in UAE, right. Maybe not ADGM, but before VARA, and it's still sitting there and waiting while the Arab countries are moving forward. And now even with Sama in Saudi talking about entering the virtual asset space, we in Turkey are still waiting. I think it's sad because as the audience, the panel before said, Turkey is one of the biggest markets in the virtual asset space, right?
Right.
And we should still be a part of that.
And I think with that, Turkey, I think, is playing a very important role from a talent point of view.
Absolutely. And
particularly, and to be honest, I was surprised. I had the pleasure of visiting Turkey again a couple of months ago, about a thriving gaming ecosystem over there, and game developers of the highest caliber coming out of Turkey. Switching gears on that a little bit, Kasen, you were here working with the regulators pretty much from the beginning of the journey of SEBA locally. What do you feel are learnings that you can pass on, if any, from your experience here to our Turkish counterparts?
To be honest, I have never met such a hand-on regulator with the FSRA and ADGM. They were very welcoming from the beginning. We knocked on several doors in 2020. We went to the DIFC. They said, no, thank you, we don't like crypto. All right, I call up my dear friend Richard. Back then, he used still to work for Binance. Then a month later, he left, at ADGM. And then he left to Binance. He said, come to ADGM. We are open for it. We came. We explained exactly what we want to do. They said, okay, we don't have the specific license yet, but there is a lab that you can go, and we will build a license for you.
Nice.
And this is how it started. So they give you the opportunity as well to work closely with certain people to create a license.
So public-private partnerships, that's one. Any other take-back that you would, from your experience, recommend that other government, other regulators follow?
The appetite.
The appetite.
Yeah.
Right.
The appetite to learn, the appetite to be the first mover. Right now, what I'm hearing is that they want to issue licensing on tokenizing securities. They want to issue licenses on a DAO.
Right.
Imagine that. To regulate the DAO.
I don't like to imagine that, but I'm glad we're in conversations with them there as well. All right, so here's public-private partnerships as a takeaway. Here's essentially the appetite, the willingness to try something new. You've moved here 3 years ago. I may guess probably because of the uproar of crypto, digital assets, blockchain entities moving over here. At Crypto Oasis, we announced this being the most important ecosystem in the world. At the time, it was a good idea. Now the numbers are there to prove it. Today, the ecosystem consists of 1,650 companies. If we look at on-chain data, the UAE is the most active in the entire region. What was your experience from moving here to today?
Well, I actually moved because of my wife.
Okay, that's a much better reason, by the way.
But it worked out okay. No, it was so for me when I moved, obviously coming from traditional banking, coming from a place like JP Morgan where everybody had one job. it was quite interesting moving to a startup at the time. I moved with Me Chains at the time, and I experienced the same thing as Christian said. I was particular over the part of custody. So we were, again, one of the first ones. There was no rule book, so we were writing the rule book. But definitely from that moment on, it was very hard, obviously, to go through it with the regulator, the GMFSRA, to actually then achieve the license and be regulated. But again, it was very rewarding. And it goes back again to what Christian said, the appetite, the risk appetite. So the regulator was definitely ready to welcome the technology in time to understand together with you what was the best solution.
Right.
And we were all together in this, trying to work and trying to build something together. And we did, and it continues. Obviously, EDGM, and now we have VARA, of course. And you can see the strides that from the moment 3 years ago where we were, comparing to what we're now, it's tremendous. It's a totally different world. And people sometimes will tell you, oh, you guys were visionaries to come to Dubai. My friends would tell me back in London, you were visionary, come to Dubai. Now everybody wants to come here.
Right.
But you came 3 years before.
Right.
But it's like, I wish I had that vision. Right. I didn't really, but it seems like it now. But 100%, and that is down to the regulator. Again, some people mentioned in the panel before, you can actually go and meet the regulator. I remember at my times in banking.
If you allow me, I love how, did you notice? You could go and meet the regulators and everyone nodded because the 3 of them, although they are emerging businesses, actually worked with a regulator. Where else in the world? Sorry.
Yeah, no, absolutely, because nowhere else in the world you can do that. I mean, no way you're going to meet the regulator in the UK. It's definitely not on the cards.
Right. Right.
So it's just that friendliness, it's just that openness, and that really transpired to our ecosystem. As a compliance firm, we are inundated with requests from all over the world, literally, all over the world, with people that want to move here because they see it on the news and they want to understand how vibrant the ecosystem and they want to be part of it.
And you come out of the traditional industry, right, for all intents and purposes, moving to this emerging space. When you think about compliance, which is your area of expertise, do you see 1 or 2 things that could be improved immediately?
Yes, I think regulation definitely can help in that, and just to level the field in terms of transparency, so everybody knows where they need to be. What is the bar?
Right.
What do we need to achieve? So I think that's a massive step. And then I would say compliance hopefully will help also solve, which is someone also mentioned in the previous panel, the biggest issues that we still have, which is again banking. Right? So if we can have this conversation with the regulator, with the central bank, with the FSRA, the IFC, VARA, then hopefully by showing that, you know, in the blockchain we're able to trace, even maybe perhaps than fiat, showing that people are compliant in terms of from a procedural point of view, with manuals and policies, with the right tools. If we continue to have the conversation, education, then yes, I think that compliance 100% has a very, very integral role to play as part of, as we evolve.
All right, I'm sitting in the audience, and I'm listening, and I'm seeing that, hey, this sounds like an interesting thing. I want to read and learn more about this. Where do I go?
To read more about
the DeFi space, the
DeFi
crypto space, the tokenization space.
Well, call us. No. So, well, I must say one thing is that you know, although, you know, this is still a new industry and it's still a new industry for many places, you know, for many countries. But I think UAE in general is definitely one of the places you can learn a lot from. You know, you can learn a lot from the regulator's website. You can learn a lot from the communities, the ecosystem that has been built. I think Crypto Oasis is a good example of that. You know, I think a lot of good things have come out of UAE in terms of the DeFi space and you know, just in general virtual assets. And I think again, I think UAE is leading by example when it comes to this industry. And I think going back to regulation and compliance, I think also there's a fine line to not over-regulate the industry. And I think this is one of the places where UAE has also been really, really good to actually, collaborate and to have a dialogue with the entities and with the companies that want to set up here in this industry to say, hey, how can we actually help you? So we from my personal experience is that I've seen the regulator asking us, how can we help you? But you need to understand, I need to regulate you. Where I say, yes, please regulate me, but this is how I want it to be regulated. Like, it's a very nice dialogue we have had over the past, I would say, a year at least with VARA. And before joining VARA, I used to work as a consultant and was actually setting up a lot of, helping brokers and exchanges to set up in the UAE. And it was the same thing, we had a dialogue and we were educating each other. And now that education has slowly becoming public for everyone to get access to. You have Carm Legal that has done an amazing analysis over, the different jurisdictions. You have CryptoAces, who's constantly, inviting people over to seminars, educational groups, as well as events. So I think this region is a good example from and again talking about over-regulation. Let's look at Europe. London used to be one of the financial hubs,
right,
at least in Europe. Hey, I don't think so anymore.
I
think UAE is becoming one of those places, and that's also why we see a lot of companies moving away from Europe and UK to now UAE, and that could be ADGM or Dubai for that case, right? Because we are regulating more, but we are not over-regulating, and we still have a dialogue with the companies in the industry, and not just like FCA where you actually just you feel like you're hey, take a ticket and wait in the queue like everyone else to communicate with us, right? So.
And the numbers really prove it, right? That everyone is moving to the UAE, the IFC set up more hedge funds than ever before last year, defining new licenses with Turkish thought leadership with that as well. Alper, I'm looking at you there. We are seeing talented individual moving here to the UAE. And personally, as Sakir, I firmly believe in this Arab-Turkish partnership, UAE-Turkish partnership in particularly. The talented individuals that we have in Turkey, the level of sophistication in particularly design, gaming, and development is probably one of the best in the region. With that, today we're seeing bridges being built where Turkish companies can tap into the UAE and UAE companies can tap into the talent in Turkey and actively supporting that. This has been an absolutely insightful panel, even for me as someone that I deal with this on a daily basis. Having said that, in 1 minute or less to each one of you, point us a picture of how the world will look like 5 years from now, where DeFi, has it been adopted? Has it not been adopted? Has the Bitcoin replaced the dollar? Has, is everything in the metaverse? But in 1 minute or less, starting from you.
I would say definitely DeFi, you can't stop. That kind of is a force, you won't be able to stop that. So this is when we come to this kind of forums, when we talk to the traditional banks, they need to be aware how they're going to start adopting this and be more open to this technology. What really excites me is something someone touched before, which is
1 minute or less?
Sorry, AI,
okay,
which I think will be the next big thing, even when it comes to also DeFi, applied to that sense.
Wonderful. Mahtab.
No, I agree. I mean, 5 years ago, you would not have many panel discussions about DeFi, I think, right? And now we're sitting here, and I think in each and every forum or events, you have a panel about virtual assets. So 5 years from now, I think, talking about this region and Turkey, I think I really fingers crossed for Türkiye to move forward in this industry. I really, really want to see Türkiye in the front of the DeFi landscape, especially. As I said before, the talent pool is very, very high. There is a high adoption, just in general, of virtual assets. It's just a matter of pushing from the government side to say, you go. As I said before, the rules are there. You know, we're just pressing the button to be published. And yeah, I mean, it's here to stay, and the banks will have to open up for it because it's not gonna go.
Thank you. Christian, 1 minute or less. How will the world look like in 5 years?
I think amazing. I have the feeling that everything will be on smart contracts. We will have AI for sure, and Bitcoin is here to stay.
Good. Now, I'd like to close this out with having you imagine that I come to each one of you here in the room. Which one of you is using the internet? Anyone does not use the internet here? Right, everyone uses the internet. Imagine it's 1994, and we come to you and we tell you, hey, there's this technology out there that's going to be in your pocket. You're going to order your groceries, you're going to order your clothes, you're going to book your flights. You're going to do that using something called the internet. In 1994, you would have had a hard time convincing people that this would be possible. I think what the panel here will sign off on in one way or the other is that the opportunity of blockchain, DeFi, tokenization, metaverse, call it what you may, is probably as large as the internet. So with that, I'd like to tell you that it's 1994, blockchain, DeFi, Web3 is the internet. Thank you very much for listening. Please give the panel a big round of applause. Thank you.
Thank you, Sakar, and the rest of the panelists. I would like to thank everyone joined us today. We couldn't do a better closure than this session. Looking forward to see you all. This event is just a start. We launched Turkish-Arab Economic Forum in 2005 in Istanbul, and this is the first Turkish-Arab Financial Forum. Looking forward to invite you soon to another city in the GCC where we can meet again and explore different opportunities and meet new friends and business partners. Thank you again, all of you, and please join us for a coffee and let's do the last round of networking.